Ladies and gentlemen, welcome back to the European Technology Network. Today is Thursday, 16th of April. It's 2 minutes past 11. The coffee's on here. The kettle is on though, however.
The coffee is on.
Welcome to the show. Today's lineup, as always, we've got a brilliant banger for you guys. Opening the show today, we've got Patrick Ryan, co-founder of Odin, followed by Paul Ryan. Double Ryans to open up the show. You love to see it, double Ryan. Co-founder and CEO of Otel AI. They've recently come out of stealth with a nice raise. We're going to be breaking that down. We've got James Wise, chair of the UK Sovereign AI and partner at Boulderson. They are deploying a 500 million pound venture firm, all about bringing a bit of sovereignty to the UK. We're excited to talk with him. We've got Dante Disparte, Chief Strategy Officer and Head of Global Policy over at Circle. Peter Pan, partner at 1KX, talking about consumer crypto. We've got Alex Gluchowski, co-founder and CEO at Matter Labs. We've got Zen Baynham-Herd, Director of Growth at Base. And then we've got Dr. Aron D'Souza, founder and CEO at Objection, recently launched. They put the video out yesterday. And they're backed by Peter Thiel and Balaji. He is also the previous CEO and founder of Enhanced Games, but he has, however...
They have an IPO. They have a SPAC IPO coming up, which I found out yesterday. But he has stepped down from CEO position to go and build his new company, Objection, indeed. And yes, we're going to break it down with him today, which is going to be good. Cool. Then the last guest on the show, we have Jeff Hawke, who is building world models at Odyssey. He is the CTO. So it's going to be good. Before we jump in, leave outdated business banking behind with Airwallex. Go to airwallex.com. We have a stats kind of news lineup as well. News. I mean, the biggest pivot I think we've ever seen today, or happened yesterday. Allbirds obviously pivoted to be an AI compute provider. The SF Wool Trainer expands into AI compute infrastructure. Obviously, the stock was down. They just sold to an American buyer for about $39 million. And then they've just done a big pivot. They've just raised $50 million in kind of
convertible note.
Yeah, convertible notes to go and build
AI compute. This is where we're at.
This is what's happening in tech.
Trainers can now rebrand to AI compute. We'll dig into that first, but a few more topics to cover today. Top trending stories. Uber has committed $10 billion to robo-taxis, trying to catch up to the Wave and Waymo after they're seeing like a reduction in ride-hailing usage. It makes complete sense for them. Are they too late? Only time will tell. Snapchat layoffs, 1,000 workers, 16% reduction. This is following a spree of other enterprise layoffs. We've actually got a breakdown from Forbes to go into that. It just seems to keep coming, and AI is to blame, apparently. Also, British investor has built a £500 million stake in China's ByteDance. Fred Blackford, who heads up Future Positive Global, has been stacking chips for a while into the TikTok owner.
I want to figure out who wrote this. Tim Bradshaw, wicked article. Thanks, Tim. Because I had a great time reading that this morning. Love
it. And then ASML, they are flying. They're raising their full year sales forecast, and we are in the green. We are in the green, my friends.
The stocks are up as well.
Everything's up.
It's a green day.
Everything's up.
It's a green day today. Good. We're all happy. Everything is good.
Everything's green. Everyone's rich.
Let's jump into the biggest pivot of all time.
Let's talk about Allbirds.
So the Wall Street Journal came out with an article titled, "For its next act, Allbirds makes an unlikely pivot from shoes to AI." I want to say that's false. It was pretty likely.
You were annoyed because you didn't buy the dip.
No, I didn't.
You were like, how did I miss this?
They're up. They're up like 700%.
I think it's more.
On the day.
But yeah, a amazing article from Suzanne Kapner over at the Wall Street Journal. As Luke mentions, the title opens up, "For its next act, Allbirds makes an unlikely pivot from shoes to AI." The company
they're down 26% today.
The company known for eco-friendly wool sneakers raised $50 million for its next chapter, a head-spinning move to capitalize on the artificial intelligence boom. The company that once made the tech industry's favorite shoe is joining the tech industry. Allbirds, ticker BIRD, is up on the day of this article 582%. That's actually come down from a 900% gain. Said Wednesday that it will change its name to Newbird AI and will look to capitalize on the frenzy surrounding artificial intelligence by buying high-end servers equipped with AI chips and renting out access to them. The news sent the shares up 582%. With the head spinning pivot, Allbirds joins a long list of firms, including a karaoke company, an iced tea manufacturer, and Eastman Kodak, that have tried their hand in hot new industries when their companies were struggling. The move comes just weeks after Allbirds, once valued at $4 billion, struck a deal to sell off most of its assets for $39 million. Indeed, the company needed a new name because it is selling its old one. I've looked at the shoes.
Why did they not just start another company?
I saw someone tweet that, and most of the comments were like, "Oh, but then you've got to be publicly listed again. It's easier to raise capital if you're publicly listed." I was like, kind of reading it. I was like, I don't think that makes any sense. Yeah,
I guess then again, you've also got the, we were talking about when the XAI merger happened. The X merger happened to SpaceX.
Yeah.
And we were like, you're an X, like you're a growth assistant at X, and now you work at a space. now you're a rocket scientist. Exactly the same thing. Like, what happens to the shoe designers? What happens to the, I imagine that there's like apparel built buyers and all that kind of stuff.
Those guys are walking into their like local coffee shop the next day. They're going to be wearing like leather jackets with like blacked out sunglasses. Like, I'm an AI guy now. I do AI.
What industry do you work in? I work in tech.
Tech now, not shoes now. I saw the shoes. I think they're vile. I don't know how they were ever a fad. The Allbirds shoe line is not something I would personally purchase.
Well, hence why they just pivoted to be an AI company. Hopefully they can buy some chips better than they can make shoes.
The announcement that it was raising $50 million for the pivot to AI sent Allbirds stock soaring to $16.99 from Tuesday close at $2.49. And yes, it is still called Allbirds unless and until shareholders approve the sale. The pivot and the name change comes next month. Yet even with Wednesday's gain, the shares are down more than 90% from the company's 2021 initial public offering. I saw a chart that was saying, like it's kind of zoomed into the uptick. And then someone sort of quote tweets it with like the full zoomed out version of where the stock is at. And yes, it is not looking too good. I think there was actually a really good example of where it's at in the FT actually, which we can.
There was
find.
an FT article about it. The headline of the FT article was great as well. If we just pull that up.
Yeah, so I can share my screen here. I'll do,
Please do
this one, I think. I love the title of this. It's Soul Searching. Really good work from the FT here. This is in Alphaville, and it's the Allbirds share price. And you can see it from 2021 to 2026, and it does not look good. That is not a chart that I would be happy to have on my portfolio, unlike ASML. But the FT has some really good stuff in here as well. And a sort of quotation from it is to pivot its business to AI compute infrastructure with a long-term vision to become a fully integrated GPU as a service and AI native cloud solutions provider. In connection with this pivot, the company anticipates changing its name to Newbird AI, which I quite like. I'm quite a fan of the new name. I think that the team have done a good job with the rebrand.
Josh Cale came out with a post yesterday, obviously talking about the story, and he says the Allbirds story is so insane. $Bird IPO'd in 2021 at a $4 billion valuation, Silicon Valley's favorite shoe. Then lost 99.5% of its value in 4 years, closed every US store, sold the entire brand for $39 million, renamed itself Newbird AI, using $50 million to buy GPUs and compete with AWS. Stock up 450% today on 875x normal volume. This is the most unhinged corporate pivot of the decade and the newest meme stock entrant. I don't know if $50 million is enough to compete with an AWS in buying GPUs.
The numbers
I don't know
staggering.
if they have to do they would have to go through like a second party platform to buy and sell them. I assume that's what they're going to do, because $50 million. I don't know what you're going to do with $50 million. Right?
Yeah. The market cap has gone to 180, slightly more than 184.5 million off the news. And let's jump back into the WSJ article, because it paints a really nice picture of where things are at and what the sort of lay of land is right now. But they say, referencing your point, and 50 million won't go far in the world of AI. Cloud computing company CoreWeave plans to spend 30 billion to 35 billion to build out its operations this year.
It's a little bit more than that.
Nebius, which is also flying, by the way, a smaller player in this so-called neo-cloud sector, plans to spend 16 billion to 20 billion this year. With an initial war chest of 50 million, Allbirds is likely to find itself at the back of a long line of much richer buyers of chips that are in short supply. A quote here from analyst Dylan Carden at investment bank William Blair. A 50 million investment is a drop in the bucket. This is by any measure a Hail Mary. An interesting point by Dylan.
But maybe they're going to raise more. Maybe they were raising the small 50 million to see the sentiment. The sentiment is obviously very good. People thought like this could be a. The company was already dead.
But you're walking into that boardroom meeting the next day.
Yeah.
And you've got then you'll have a leather jacket.
Dying company type thing, or we're in the new era of Allbirds. But the sentiment was good. Obviously, it's you're down 26% today, but there's always going to be a bit of a cool off period. And so it's kind of relatively kept its gains. I mean, we'll see what happens. It's only 11 a.m., but we'll see what happens over the rest of the day. And maybe they'll raise more money off the back of the positive sentiment, because they're right. 50 million quid is not enough.
It's not enough. It's not gonna do it. What's very interesting to me is I guess a state of where the market is at right now is that Birkenstock, Crocs, and another publicly traded sort of shoe seller were all up on the day. They rode the news, they rode the high. They were sort of averaging around between 2 and 6%. As a response, a number of memes have flooded the timeline around. Here's how the Birkenstock CEO is reacting. Here's how the Crocs CEO is reacting. Here's how all of these sort of shoe manufacturers are reacting, and all of the memes are kind of like, who's our AI guy? Like who's the guy that's gonna this is obviously working. Like how do we do this thing?
It's kind of like it's almost like akin to how this only happened over the past 10 years, and it did happen kind of like the Michael Jordan era as well. But then you've also got more celebrities who are purely internet celebrities. They've obviously got an audience, and then they go and get a business guy to go and help them start brands.
Yeah.
And so the celebrity is just the face of said brand,
no
and
depth.
clearly does absolutely nothing in terms of the business operations. Obviously, that's not all celebrities and not all businesses, but that's a pretty that's a thing, right? This is kind of similar in a way. It's like all the shoe brands are kind of dying. Or, if your shoe brand is kind of dying, you don't need a business guy, you need an AI guy.
I think this one was just like a particularly bad one. Like, look at the designs, and I like Birkenstocks. I don't own Crocs, but I think I might have in the past, and I respect the Croc line. I'm a fan of Crocs.
Crocs are doing an incredible job.
I've only ever seen 2 examples of this historically, and it's always been bad. It wasn't sort of a live thought. Well, I was live. I was about 1, but like the .com related saga where a company would simply rebrand to company name and chuck a .com on the end, and their stock price would moon, as we're seeing here with Allbirds.
Well, similar to chucking AI at the end of your name in 21 or 20.
Yeah, for like venture funding, 100%, and also with the really early
AI in your deck. That was obviously that was a bit of a meme.
Yeah. Like pivot into it, but the for publicly traded companies, the .com is the first example, and the second example was just before the NFT boom. So we're talking around the times that GME and AMC were mooning, where NFTs, the rumors were going around that these things were happening. People didn't know what it was. It was an emerging market, but it looked like maybe there's money in here. Companies would put out a statement saying that we are going to start working on NFTs. A publicly traded company would say that, and their stock would ride 70% on the day.
Yeah.
All they'd have to do is say like, we're going to start making NFTs, or we're looking at NFTs, or we help facilitate the transaction of NFTs. Just literally NFTs, anything, stock would moon. Yeah. And we were seeing it with like publicly traded companies, like those two examples. .com,
so this is the first time NFTs. Where a genuine, a company that genuinely has been a very, very strong company in the past has died and then come back to life in a completely different industry.
Yeah.
I mean, I don't know if there's been a CEO change or anything, but I can't imagine the CEO staying in their current position and, one day talking about shoes and how, we're going to go into this line because, we're going to go follow in the steps of I don't know, whatever, this company because they're doing super well. And we're going to go make this style of shoe because it's doing super well. Now you're talking about, now we're going to become a fully integrated GPU as a service company, like you don't just make that change in a few months.
Yeah, so they reference a little bit here. Whether it succeeds or not, it is a startling new path for a company founded in 2015 by Joey Zwillinger, an industrial engineer, and Tim Brown, a former professional soccer player. Allbirds pioneered the use of sustainable materials such as merino wool. Shout out to merino wool, huge fan. And eucalyptus tree fiber in footwear.
You paid by the merino wool company.
Big merino wool. Don't want you to know this, but you can actually get it quite cheap. And other athletics gear. Its Wool Runner, launched in 2016, became a favorite of Silicon Valley tech workers, but it turned out that many consumers didn't want to pay a premium for sustainable goods, which is the sad thing about all of these sort of green tech, sustainable
then again,
brands.
that's also the other point, is that they've gone from, a lot of their shareholders are kind of green tech maxis, love that kind of stuff. Now they're doing probably the least green tech thing ever, buying GPUs.
Yeah.
I'm sure a lot of their investors aren't too happy about that.
I'm here for it. I'm pro this. It's funny though, because a lot of these, sustainable maxis, everyone's a sustainable maxi until you get hit with the price point, until you get hit with the premium. And then like
$7 for a bamboo for a bamboo toothbrush.
Yeah,
what the
hell? Suddenly you don't want to get the nice imported leather from Portugal that's been grass fed and raised. You want to go for something cheaper. So, look, I don't know. Are they true sustainable maxis? Hard to tell, given that they've pivoted the whole company to an AI compute provider.
Well, I mean, they've just had an incredible day, going up 700%. Having been a sustainable maxi.
Actually in turn,
they predicted the market. They were like,
they're setting the standard.
I can kind of tell this is going to happen.
They're setting the standard.
Yeah. There's definitely someone who owned the stock beforehand,
but it
as
seems
a sustainable
to be
maxi, and is now saying, I knew this was going to happen. I thought this was gonna be the case. That's why I held on. Mm-hmm. I believe in Allbirds doing the right thing for their shareholders.
I stand with Allbirds here. And the WSJ kind of allude to the fact that it's not the only company thinking about doing this. And they write here in the article, it's not the only company looking to find a second life by capitalizing on the artificial intelligence boom. A Florida firm called Singing Machine had been in the business of selling karaoke machines until it changed its name to Algorithm Holdings. Oof, that is a fire name.
Algorithm Holdings.
Wow, real one-up from Singing Machine. In February,
Singing Machine is pretty cool.
Yeah.
To be a karaoke like seller, a karaoke machine seller.
Algorithm Holdings is S tier. That's an elite name.
Yeah.
In February, it tanked trucking and transport stocks when it said it had an AI technology capable of increasing trucking efficiencies. Sees the same thing. Hey, we've got this sick thing. Similar thing like with the, this news hits. It's shocking. It's striking. It's fears that it will cause some sort of technological change or like disrupt the current equilibrium. And we see like violent responses from the market, which is already in an incredibly sort of sensitive state.
So I mean, look, the market's up today. I don't really understand why, but it's a good day to be in the markets.
I checked my phone.
Happy days.
Everything's looking green.
Yeah, we're all green.
It's like the financial equivalent of like a Whoop band. My Whoop score. If I wake up and it's green, I'm in recovery. I've slept well. I'm happy. But hey, people don't tell you if you check your trading 2-on-2 account and that's looking all green as well, you're gonna have an.
To be fair, I think for the past 4 days straight, it's because I'm in Bloom Energy. past 4 days straight, every day I've woken up, I've looked at my Trading 212 account. I've been like, come on, let's go. I'm up.
A little Leopold Jr.
I'm good to go. I get a bit of, bit of a
buzz.
Bit of a buzz. Yeah.
It's good to ride those buzz of those gains.
Let's go through some of these. I mean, it's some obviously incredible memes and tweets came out of the Allbirds story. Let's go through through some of them. We've obviously gone through the Allbirds story's insane tweet. Nick Carmi had a good tweet, which I thought was quite funny.
The Ramsey.
Nick Carmi at Skeptroon said, so you once had a $4 billion valuation as a hip, sustainable wool sneaker company. Allbirds. Yes, Dave. You sold your whole brand and assets for just $39 million after years of bleeding cash. Allbirds. That's correct, Dave. Now you're pivoting hard to AI compute infrastructure and GPUs as a service with $50 million financing. Allbirds. That's correct, Dave. And your stock has just exploded over 300% in a single day. Allbirds. That's correct, Dave.
Brilliant work from Nick. Excellent.
That perfectly tells the story as well.
He's done a great job there. Obviously, he got there early as well, because you can see the 300% in a single day. Nick was hot on the news.
Here we
went
go.
on to triple that ride further down the line.
That guy probably put a little bit of cash in. He's up 400%.
I mean, I don't know if I'd touch the thing. I'm not sure how this saga ends.
The corrections at the moment are only 30%. I mean, at the beginning of the show I checked, it was 26%.
Yeah, what are we on now?
Let's check now. Let's just see how much it's gone up or down in the past 23 minutes since we've been live. Oh, hold on. 28%. So it's only 2%. It's only gone down 2%, which is obviously quite a lot, but like for a stock that just mooned 700%, it's actually not that bad.
A good job over there.
Oh, we're going up to 27%.
We're riding.
Here we go.
Happy days.
We're
Let's move on to the next bit of news that we have on the docket today. We've got Uber committing 10 billion to robo taxis. This was in the FT, and it's part of a broader move. I don't know why they weren't doing this earlier. I feel like is it too late for them? I don't really know. 10 billion is a lot of money. And the FT are calling it a strategy shift. It is a bit of a shift, but it just seems like a natural evolution for these guys. But this is from Rafe.
I think it's
Rossner.
made the headlines purely because, well, obviously it's Uber, but it's because that they made their dent on the market being a high margin type. They didn't buy gig economy stuff. They didn't buy any of the fleet. They allowed their users to kind of use their own vehicles to then, and they just kind of leveraged off the back of that. So this is why this is a kind of
a big
semi-large story, right? Because that's how Uber dominated the market by winning the gig economy.
No, that makes complete sense, and I guess would warrant large strategy shift. So Uber has committed more than hold on, I have a thing about Uber has committed more than 10 billion to buying thousands of autonomous vehicles and taking stakes in their developers, breaking from its asset-light gig economy business model to avoid disruption from robo-taxis. You're ahead of the curve.
Am I not going to get it correct?
The ride-hailing app has aggressively increased its deal-making over the past year, announcing partnerships with more than a dozen providers, including China's Baidu and US-based Rivian, as well as plans to launch robo-taxi services in at least 15 cities in 2026. These deals put Uber on track to invest more than 2.5 billion in equity stakes and spend over 7.5 billion on robo-taxi fleets in the next few years, according to FT calculations based on analyst estimates and people familiar with Uber's deals. The agreements are contingent on its partners hitting a certain deployment milestone. So that makes sense. They're sort of tranching the money based on specific KPIs being hit. A very, very typical thing to do with something like this when you're working with design partners. You kind of unlock more capital as progress pushes forward. And it makes sense. Like, I mean, yes, we can theorize around this. We can theorize the philosophy of what direction this thing is heading in. We can theorize around the technology, but I think the bottom line is we are seeing waves and we are seeing Waymos here in London. We're seeing them in other major cities. So the expansion is real. It's very obvious that would eat into the ride-hailing apps bottom line.
I'm surprised this hasn't happened sooner.
Yeah, no, I agree.
I mean, I feel like they've been cornered into a pigeonhole here where they think they can see all of the major kind of car manufacturers doing deals with all of the companies that you just mentioned, Wave, Waymo, etc., for ride-hailing services. Obviously, your market's going to take a dive. So this is like a clear. Our market is it's not dead, but it's dying. It's going in that direction. It's going in the red, and they've almost been kind of pigeonholed into having to they're being forced to do this.
Yeah. They're fighting from a corner instead of pushing the fight. Maybe a slight delay in how they should have done that and how quickly they should have adapted. But on Tuesday, electric vehicle maker Lucid said Uber had expanded a previous deal to invest a total of $500 million in the California-based company and buy at least 35,000 of its cars, likely costing the ride-hailing group at least $2 billion. This is a quote from Walter Piecyk, analyst at Lightshed Partners. Says step one is a complete narrative change around its business. I think they are easing people into the concept of Uber owning fleets of vehicles, he said, which makes sense. I mean, people are a little bit, the same thing with anything like this, right? We saw the fights in the streets of New York when Uber first launched. It was taxi drivers versus Uber drivers. There's a very famous video of that guy kind of like chasing down an Uber driver and like kicking the hell out of his car.
Do you think Uber drivers now going to be attacking?
There's already been headlines. There's already been headlines about Uber drivers
ripping LiDAR sensors off the top of Jaguars.
They're furious. It's just so funny, right? It's like, hey guys, look, you kind of did it to the other guys, so this is like a natural step of evolution.
Talk. Now do it to the robots. Go on, do it.
You can't reap the rewards of natural selection and then cry when it comes to you.
Yeah.
I just don't think that's a fair position to take.
So this article came out, I don't know, probably it was about yesterday, I think it was. Yeah, yesterday. As of today, Uber stock is up.
How is it responding?
And responding well. There was an interesting graph in this article on the FT that showed that Uber's shares slide when every major robotaxi operators accelerate. So when Waymo and Tesla expanded their services back in like kind of November 2025, Uber's share price took a dive. Same when Waymo raised $16 billion.
So you can share that.
The stock took a dive again. And it hasn't obviously it hasn't mooned, but it's in a better position than it was. And I can imagine if they do this well and execute well, it will kind of rebound them to where they have been in the past.
I think this is. I'm a huge fan of robo-taxis. I think they're going to be amazing. I think they're going to change the game. It's going to be nice. I'm really interested about like the pricing of these and how they actually end up putting it down. I remember when Waymo was in its trial phase, I was lucky enough to be with someone who had access to that, so I managed to just get in there, ride and enjoy the service a year and a half, 2 years ago. I didn't ask about the price. I don't know why it didn't come up, so I'm not actually sure what they're pricing it at the moment. I've heard obviously it's incredibly cheaper than but
I feel like they'll have to offset costs from the amount that they have to buy. So like Uber, for example, now buying at a pretty fast rate, buying multiple thousands, tens of thousands, hundreds of thousands worth of fleets, and those costs will have to get offsetted by something, and that I assume will be a consumer. They'll take that on now. They took the cost on now, but then they'll add a markup on the basis that they need to kind of
I remember
that money
seeing,
back.
Musk's like robo mini. I'm not sure where that's at, like the Tesla robo taxi push, but the screenshots that I was seeing on the timeline were it was like shockingly cheap, like unbelievably cheap.
Yeah.
But I'm not sure if that's just like a quick sort of ploy to like undercut the market to get attention and whatnot.
Investor Nick at investor_Nick_ says, actually literally what I just said, Uber has no choice but to invest heavily in robotaxi wars to come. You can already see ride-hailing drivers demand weaken in US cities with robotaxi services available for consumers. Will be fun to see how this all plays out, and has a graph on there showing ride-hailing driver utilization declining more in robo-taxi markets, which I think is not that it's not surprising, right? It's obviously going to happen.
Yeah.
It's just a matter of time.
I wonder how quick. This
and I just think Uber's not. They haven't been quick enough to this almost.
But I do. There's probably a disconnect in which that. I feel that a lot of people are currently anti-Tesla. One, because they're anti-Musk, but two, they're also a bit concerned around the safety protocols of the car, which, I mean, those who are aware of the technology, it's basically safer than actually having a human driver. We've seen some incredible examples online of it doing basically inhumane, sorry, not inhumane, like that's the wrong word, like non-human
Inhumane acts. Yeah. What kind of inhumane acts have they been doing?
Well, they've been saving lives, basically, like non-human level of reaction time and adapting and stuff. There's a really recent one that was really cool that it was basically like this huge mashup on the highway or motorway or whatever, and it navigates through smoke and fire. This incredible at pace.
That should be a tagline for Uber. Navigates through smoke and fire.
Yeah. I'm not sure how much your average driver is navigating through smoke and fire. If you were, then probably.
I think you're in the wrong place.
Maybe change profession.
Yeah. Anyway, let's move on. Polymarket, the world's largest prediction market. Stay informed and profit from your knowledge. Go to polymarket.com. Let's move on to Snapchat. This came out in The Guardian. This morning, I think it was. Oh no, it was yesterday. Snapchat lays off 1,000 workers at a 16% reduction. The cuts by Snapchat's parent company come in response to a declining stock price and pressure for an activist investor. Snapchat's parent company plans to lay off 16% of its employees, around 1,000 people, citing a rapid advancement in AI. The social media company told staff on Wednesday in an internal memo that staff reduction is part of a wave of tech industry layoffs in the past year, with many firms blaming AI for the cuts. Snap Inc.'s layoffs followed demands last month from Ironic Capital Management, an activist investor whose portfolio manager wrote a letter to Snap Inc. CEO Evan Spiegel, calling him to reduce costs and headcount while criticizing the company's current strategy. In Spiegel's memo to staff, he claimed that the layoffs would move Snap towards profitability and suggested that artificial intelligence could fill the lack of human labor. He wrote, "While these changes are necessary to realize Snap's long-term potential, we believe that rapid advancements in AI enable our teams to reduce repetitive work, increase velocity, and better support our community, partners, and advertisers." The most interesting thing in this article was something that I read and pulled out this morning. It goes, as discontent with AI and concern over its impact on the labor market grow, however, top AI firms such as OpenAI and Anthropic have been increasingly concerned about their image problem and have mounted a political charm offensive to address AI's potentially harmful effects on the labor market. That you see all of these kind of, major, multi-billion-dollar market cap companies reducing their headcount, while the model makers are the ones kind of almost empowering the human as a narrative play, which I think is a super interesting dynamic when you have the companies clearly using the top models, being able to afford the compute power to be able to use it at scale as well, reducing their headcounts just purely because, obviously these companies want to get to profitability, and this is a new way that what didn't exist 10 years ago to be able to do that at scale. While you've got the model makers who are making the models that these large market cap companies are using, trying to empower the human. So it's like a weird kind of dynamic.
I think as much as we dress it up, the headline is AI will mean that you will probably have to reduce your company. There's probably going to be some some bloat there. And I think that's fine. It's just another technological revolution. That's okay. The market is rewarding these decisions for these public CEOs. We saw Snap's stock shot up 8% on the Wednesday after the executives announced that it was limiting this 1,000 jobs, which is a 16% reduction in the workforce. Block shares had fallen 16% this year before it laid off 4,000, which was the largest layoff percentage of any sort of S&P company of all time. Nearly half of its employees in late February. The stock shot up 23% in a day. And then Forbes have got a really interesting piece out at the moment. This was done by Mary Roloff. And it's basically a timeline of the enterprise companies that are sort of following this suit of cutting jobs with AI as the main premise. So Jan 20, when does this start? This starts in Jan 2026, so just at the start of this year. Social media platform Pinterest said it would cut about 15% of its workforce, which is about 800 people based on a headcount of 5,200 at the end of 2025, to reallocate money toward AI-focused roles. This, however, sent its stock tumbling nearly 10%, which is interesting. Then we get to February 9th, 2026. First reported that Salesforce laid off fewer than 1,000 people in marketing, product management, data analytics, and the company's Agentforce AI product at the start of the year. The cuts came about 6 months after Salesforce CEO billionaire Mark Benioff blamed AI for axing 4,000 support staff jobs. And then we go through this. We've got Wise Tech Global. We've got The Block, Jack Dorsey's company that we just mentioned. We've got Atlassian that cut about 10% of its workforce. That was 1,600 people to self-fund further investment in AI. We've got Reuters reported that Meta was planning layoffs that could impact more than 20% of the company. Crypto.com, 12%. Then Meta laid off 700 people in March 2026. Oracle founder Larry Ellison cut 20 to 30,000 employees as the company heavily invested in building out its AI infrastructure. And now we see Evan Spiegel, who's told Snap employees in the memo that they will be losing their jobs, about 1,000 people. If you're one of these individuals that sits at the top and there's pressure from the board to increase the stock price and you're seeing your peers lay off, a certain percentage of the company, it's almost a no-brainer. It's almost like they want to do that anyway to reduce blow and sort of get maybe redirect
This is
capital
a frictionless way to do it, especially when everyone else is doing it.
Get out of jail free card, right? It's
Kind of,
hey, look, yes, this is tough. I want to do this anyway, but now I can approach the board and say, look, this will be received as a sign of strength, not a sign of weakness.
Yeah.
The market will respond positively if we do this. So the narrative's there. It's kind of laid out for them. Whether it's the right decision or not, we'll see. we saw Klarna back in the day. They were kind of the first to do this. They were a little bit too early. They were like, hey, we're going to lay off a bunch of people.
I was like, whoa.
Because AI is so good. And then they did it. And then 3 months later, they were like, we're going to double headcount. Yeah, we were like, oh, that was a bit of an error. Maybe they fired too early. But now it seems to be the whether it's supported by the narrative that if you do this, your stock will, ride the day, or whether it does make sense to reduce blow and be a bit more AI native. I think it's probably a combination of both, really.
For sure.
But
it's an interesting story.
Snapchat is, their stock price was pretty down. I don't understand. Where does all their revenue come from?
I think ads.
But I guess they've put. I don't have Snapchat anymore. I used to use it loads when I was younger.
Ads. I just think ads.
Ads on stories.
And creator. They have a bunch of creators. I think on there that charge for certain shout outs or whatever, and obviously we'll make a percentage of that maybe.
No, but they wouldn't do that through the app. I guess you have creators that are selling products via Snapchat. Press the link to buy. Maybe they have to sign up to some sort of Shopify or Snapchat Shopify type thing that would give them a cut. But I guess ads in the stories, because on Instagram now it's the whole thing is just ads.
There'll be an ads model.
But I just don't understand that should that be a public company today? Maybe not. They were.
I think they were an app that had the most amount of users, maybe 7 years ago. Pretty sure they were the highest activity app.
Really?
Social media. I'm pretty sure that's wrong, but I'm pretty sure it was. Anyway, we can move on. Framer, build better sites faster. The all-in-one platform where enterprise teams design, build, ship production-ready websites. Go to framer.com/ETN. Let's move on to the British investor building a $500 million stake in China's ByteDance. This was a wicked article.
This is cool.
Thoroughly enjoyed reading this from Mr. Tim Bradshaw. The article goes, Fred Blackford bets on valuation gap between China's ByteDance and its Silicon Valley rivals. A London-based tech investor has quietly accumulated a ByteDance stake worth more than $500 million, betting that the AI, social media, and AI group is undervalued compared to its Silicon Valley rivals. Fred Blackford, who heads up Future Positive Global, started buying stock in TikTok's parent company on the secondary market last year, over which time its valuation has doubled from less than $300 billion to close to $600 billion today. His investment came as ByteDance's outlook was hit by a years-long geopolitical saga over the fate of TikTok in the US, as well as a Biden-era executive order that prevented US funds from investing in private Chinese companies in sensitive technologies such as AI. The way that he accumulated these shares was super interesting. So this is a little bit further down in the article. So he said this is like how he went to go and acquire $500 million worth of ByteDance stock. He said, obviously, he's understood the thesis behind why he's buying it. Now he's like, right, let's go buy. He said Blackford assembled a group of primarily European and Asian investors who shared his thesis, then went hunting for ByteDance stock, a process he describes more akin to investigative journalism than investing. He said, you're identifying who the main investors, understanding who their limited partners are, and making an educated guess on who may be sitting on a big markup and interested in liquidity. He said, then you are cold calling or looking for mutual friends or associates. It's been a grind.
Love to hear that.
I absolutely love. I think it's like, the classic story of kind of, you're going out on your own. No one else really believes in the thing that you're buying. They obviously believe that it's a very, very, good investment, of course, very strong company and completely undervalued. And, he's just doing the hard grafts, the hard miles, going to find these people that own these shares in small corners of the earth.
Give them a bit of liquidity.
Cold calling them, getting on the phones.
Love that for him. There's a really cool quote in here that he goes, there was a real mismatch between a high quality business we knew it to be versus what it was priced at, Blackford told the FT. We regard it as one of the most high quality AI companies on the planet. And yet since the beginning of last year, it was almost trading like a Benjamin Graham style cigar butt, which was the first time I'd heard that, that sort of reference. And when I looked into it, it was basically a suggestion that this is credited to Charlie Munger. So he was credited Munger with encouraging him to move on from the cigar butt strategy espoused by his mentor Benjamin Graham, which involved buying a cheap stock akin to a discarded cigar where there was just a single puff of value that remained in the cigar.
No way, that's so cool.
Picking up like cig ends and just like having a quick take there because there's a little bit
That's
left
what the
in
investment strategy is akin to.
Just those little one-hit wonders. But no, he was saying it was trading like that, and he was like, I don't know why. There's loads more
okay.
to
There's
get
loads
out
more
of this.
value
Yeah.
Okay.
It's there's a lot more in this, basically. I remember this sort of back and forth when there was a whole... people were erupting that TikTok was closing down. I remember that the Chinese version of TikTok called Red Note were getting a bunch of US folks sort of head over there, and there was whole like viral memes around the US sort of short form lovers in the comment sections with all of the Chinese short form lovers. And watching them interact was incredibly funny because these people were posting like American-style TikToks on Red Note, and then all of the Chinese users of the app were almost like there were references that they were kind of like looking into a zoo, and they were like really entertained by what they see, and vice versa. For the US folk heading on over to the Chinese TikTok version, which is quite funny. Blackford has said, we're still net buyers for as long as the business is attractive and the price is fair. I expect that will persist for some time.
So it'll be interesting to see how his portfolio does. I don't know how much he will buy, how much more he will buy, but already has a $500 million position, probably more now. Yeah. Will he get to the Billy?
He's no stranger to this. Further down in the article, like Blackford said that looking past the challenges, Future Positive felt ByteDance was one of the most interesting investment opportunities that we have ever come across. I quote, even if ByteDance was valued at as a Chinese public technology hyperscaler, there's still a massive gap to converge, referencing earnings multiples with Tencent, Alibaba, and Baidu. And then you compare that with the US, so there's another setup there as well. He added, before buying any shares, Blackford, who also runs a US-based venture capital firm and has previously led deals in Pinterest, Beyond Meat, consulted other overseas investors in Chinese tech, and this is where he met Li Lu, the Chinese-American founder of Seattle-based Himalaya Capital, and James Anderson, who backed ByteDance while at Bailey Gifford. Before moving to Agnelli's family's Lingotto in 2023. And then, it's when he comes into like how the process works in terms of his strategy.
And then he grinds. And he's like, right, let's go and find these shares. I've got my LPs. I'm ready to go. Got my investors backing me.
Got my money. Got my wad of cash.
All I need to do now is go searching.
Let's go bless people.
Go searching. Do some investigative journalism instead of investing. And we've already done the investment part. We know the thesis. We understand what's going on. Now let's go and find these suckers.
Yeah. I wonder if this guy's in Allbirds. He's clearly got an eye for it. Maybe Allbirds
was seriously underpriced.
Maybe
now
Allbirds
look at him go.
is, to me, now that I know what the thing is, Allbirds, how's it trading? Allbirds is the, what do they call it? Like a cigar puff?
It's actually cooled off. It's only at 29% today.
So yeah, that to me looks like a bit of a Benjamin Graham style cigar, but if I'm honest, this is now part of my vocabulary. I'm gonna start saying that in rooms when people.
That's a great story.
They'd be like, yeah, I'm looking at this thing, like, what do you think? I'd be like, it looks a bit like a BG cigar, but to me they're pal. I'll be like, what? And then I'll leave. I'll just leave the room without saying anything.
You have to explain it.
Be in a leather jacket as well. No, it's more ominous. So I just sort of.
Or a lot if you don't explain.
Yeah. I'll just let them just like sit in negative aura as I remove all of the aura from the room and then
great
take my leave.
Just
like Fred Blackford has done.
Indeed. You guys are aching to each other.
I'm feeling kind of close to this guy today.
Maybe we get him on the show.
I feel like we have similar dress sense.
Yeah, we should get him on the show.
Well done to Fred for spotting the alpha. We love alpha.
The infrastructure for the on-chain world. Go to base.org. Let's move on to our final story of the day before we have our first guest on. Our favorite stock of the day is ASML, raising 2026 outlook on the AI chip boom. We're not going to spend too long on this because we've got some tweets to go through too, but ASML has lifted its full year sales forecast as the AI boom thirst for computing power drives demand for the advanced chip manufacturing equipment that has transformed it into Europe's most valuable company. The Netherlands-based group said on Wednesday it expected total net sales of $36 to $40 billion this year, up as much as 22% on 2025. Analysts had previously forecasted sales at $37.9 billion, according to Visible Alpha. Founded in 1984, ASML's grip on the market for the lithography equipment needed to manufacture cutting-edge chips has turned into Europe's biggest winner for the AI boom. The company can produce only a few dozen of its complex extreme ultraviolet lithography machines a year, which, by the way, sell for like $400 million. Its Amsterdam-listed shares have climbed about 40% this year as demand for the powerful chips required to build and run AI systems continues to dwarf supply from manufacturers such as TSMC. The shares slipped 0.4% in early trading on Wednesday, giving the company a market cap of $497 billion. Christophe Fouquet, ASML chief executive, said orders from customers, which include TSMC, Samsung, and Intel, were very strong, with supply shortages continuing for the foreseeable future. This is a perfect European example of sitting in the middle, making the deal happen, and taking the opportunity, just
getting in while you can,
getting in a niche opportunity within a large market, and just hoovering up all of the good stuff.
Would they be Europe's first $1 trillion company?
Potentially, it depends.
Hit that, I don't know.
Hey man, I'm bullish on 11 Labs.
Yeah, no, obviously 11 Labs. They're putting in the work.
$11 billion valuation, they're getting there.
Yeah. They are obviously on their way. But I think they would be Europe's first $1 trillion company. If
they're only halfway there.
I'm not sure if we have one already. I don't think we do.
No, I don't think we do. This is the most valuable company in Europe for sure.
Yeah. Love to see that. And yes, as we say, we're very happy with all the work those guys are doing over there. Of course, because it means that we wake up and
proud
see green.
Shareholders. Congrats to the ASML team. Congrats to our portfolios. We love it.
Doing great work over there.
We are very happy. Anyway,
I just want to talk a little bit more about ASML because it is actually quite interesting, the strategic relevance of ASML.
No, please do.
Geopolitically. So some in the AI industry now see ASML as a new choke point, throttling the ability of big tech companies such as Nvidia and Google to expand quickly enough to meet soaring demand for AI applications such as OpenAI's ChatGPT and Anthropic's Claude Code. The memory chip industry in particular has seen demand from the AI data centers far outpace manufacturers' ability to increase production volumes, driving price rises for a range of consumer electronics, including PCs, smartphones, and game consoles. These stocks that they're referencing are the SanDisks, they're the Samsungs, which they're putting noise out of record sales, and it would be interesting to see that level of, what's the word? I was going to say lunacy, but it's just like whenever the Nvidias or the Googles look to one of these, I'm not going to say that it's like ASML is like an undiscovered stock because it's not, but it doesn't really get in the headlines as much as other American AI players. But it'd be funny if all attention suddenly turns to ASML. Is it undervalued?
Because of the attention. Or is that's not your point?
No, not saying it's undervalued. Well, maybe it's undervalued. I don't know. Like I'm not selling my stock, so I guess I do think it's undervalued because I think it will go higher in the future. But it'd be funny to see ASML get caught in the the buzz and the attention buzz of like the Nvidias coming in and like, right, this is somewhat of a blocker. Let's just absorb the whole thing, or like do some sort of deal with them that makes the stock pop. That'd be funny to see it get washed up in all of that sort of craziness, which is something I'm quite looking forward to.
Nice.
But
your portfolio.
Yes, and of course my portfolio as well.
Of course.
To that.
Okay, before we jump in, leave our daily business banking behind with Airwallex, the all-in-one financial platform built for the pace of modern business. Go to airwallex.com. I want to dive into the Dwarkesh pod that he did with Jensen. This obviously was released yesterday, I believe it was, and it was an interesting one. It was a little bit spicy.
Yeah, it did get a bit spiced up.
Dwarkesh posted a distilled recap of the back and forth with Jensen on the export controls, which I thought was the most interesting bit. So let's talk about that. And we've got some funny memes as well after it got posted. Anyway, he says, Dwarkesh, wouldn't selling NVIDIA chips to China enable them to train models like Claude Mythos with cyber offensive capabilities that would be threats to American companies and national security? Jensen came back and said, first of all, Mythos was trained on fairly mundane capacity and a fairly mundane amount of it by an extraordinary company. The amount of capacity and the type of compute it was trained on is abundantly available in China. Basically saying they can already do it. If they wanted to. Dwarkesh then said, with that then, could they eventually train a model like Mythos? Yes. But the question is, because we have an IPO flop, because we have more flops, American labs are able to get to this level of capabilities first. Furthermore, even if they trained a model like this, the ability to deploy it at scale matters. If you had a cyber hacker, it's much more dangerous if they have 1 million of them versus 1,000 of them. Jensen then came back and said, your premise is just wrong. The fact of the matter is their AI development is going just fine. The best AI researchers in the world, because they are limited in compute, also come up with extremely smart algorithms. DeepSeek is not an inconsequential advance. The day that DeepSeek comes out on Huawei first, that is a horrible outcome for our nation. Basically saying, they almost like hindering themselves almost. I also saw an article basically saying, they have the ability to create things like a nuclear weapon that is as advanced as the US do, and they probably already have them. Why are they not attacking the US if they have the capability to do that? Because they don't want to. And it's the same thing here. It's like, if they have the abilities to go and create something that is akin to a mythos in the abilities, then why are they not using it as a cyber attack kind of tool against the US? Because they don't need to, they don't want to. And that was the main thing kind of surrounding this whole thing. And it was a really interesting conversation. So if you haven't watched it, definitely go and watch it because it was good.
Yeah, there's a really cool. I just want to share the video as well from these just some of the memes. That
the great tweet, yeah, the great, yeah.
So I like it. Play this. See if our viewers can see that. I think so. Yeah.
You're not talking to somebody who woke up a loser, and that loser attitude, that loser premise makes no sense to me. We're not a car. We are not a car. You're not talking to
so a lot of the debate was around how Dwarkesh was a little bit out of his depth chatting with Jensen and the way he was framing I think he said he used the analogy enriched uranium. We're basically handing enriched uranium to China if we're if we're working with them on this, or if Nvidia is selling to them. And he's just sort of flabbergasted by the comments in terms of he's like, what are you saying? What's going on here? They have the power, they have an abundance of energy, they have all the compute, they have everything they need. We should be having an open dialogue with them. It's incredibly important that our AI researchers are talking to their AI researchers. So yeah, it's done the rounds mainly because one of the parts at Lightspeed.
It got super fiery.
It got pretty fiery. Yeah, it got pretty fiery. But it was. I love that meme. You're not talking to somebody who woke up as a loser. I might just start saying that every day.
There's also a new sweater that just dropped for next year's GTC. Can we get it up?
Oh, you want me to? Yeah.
Nice color as well. Looks good. I'm a fan. Can you see that?
Yeah, I just can't get that up.
Are we up?
Oh, it is up.
Oh.
I don't know what's happening. Let's just welcome our next guest in. It's Patrick Ryan.
Let's do that. Before we do that, Polymarket, the world's largest prediction market. Stay informed and profit from the knowledge. Go to polymarket.com.
Let's bring Patrick Ryan into the studio for our trivia game. We're going to be playing a bit of VC trivia with the co-founder of Odin. Paddy, welcome back.
Yeah. How's it going?
It's going good, man. It's always good to see you. How are things?
Yeah, good. I've got a bone to pick with you, Ronan. You owe me a cat. And
Oh no! I said we'd drop off a care package, didn't I?
I messaged you yesterday.
No, sorry about that. That's my bad. We'll have to get an ETN care package.
All right, we need to do a trade deal, don't we?
Yeah, we should do a trade deal.
Yeah.
I'd love to do a trade deal. I want to do a trade deal now you've done your rebrand. Which we haven't talked about.
Yeah, we released that in parallel with the product launch we did recently on Delaware.
Congrats.
I was thinking about whether to write about it, but it's who really cares about our rebrand?
I don't know. Sometimes if it's done badly, well, I get Granola's was done and it divided a lot of people because some people really liked it, some people hated it.
You're saying deliberately do it badly, so
no, I'm not. Maybe do it controversially. I don't know how you rebrand in a controversial way.
Yeah. I see your point. Yeah, I don't know. I think we wanted to do something that felt more polished and less bland. There's a lot of blanding out there. I actually think brand is something that startups underestimate a lot. I know you guys talk to Alex McDonald a lot, right? SQL.
Yeah.
Something he's big on and said to us in the early days. And I really strongly agree with that. I think it can, especially in a world where it's so easy to generate software, what you stand for, what your values are, and how people talk about you, community, all of those things, all the things that make up brand alongside look and feel, I think is so important.
Yeah. Well, we've been told a lot that I think we've been carried a lot by our brand, which is
some
good.
of the older, shout out to Sammy who whipped up.
Shout out to our designer. Well, look, let's jump in. Let's quickly kind of talk about the expansion, and then I guess within that the rebrand and everything you guys are doing, and a quick update. We'd love to hear it.
Yeah, cool. So the way we like to think about it is kind of bridging the Atlantic. If you look at global venture, I would say venture is very much a global business now, but obviously with a US center of gravity. So about 2 in every 5 venture dollars are invested by US LPs, but 3 out of 5 are coming from Europe, Middle East, Asia, kind of wherever.
Yeah.
And we felt there was a real need for something that makes it easier for US investors to invest in European companies and then also for European investors to invest in US companies.
Sure.
And that's a big part of this product launch. It's an institutional limited partnership structure. That means for non-US LPs, it's got very clear global transparent tax treatment. Unlike some other structures, there can be a bit of uncertainty on things like LLCs. I'm really in the details of SPVs. Great. For those who don't know, Odin, we basically make it easy to run your VC firm on your phone. And we handle back office. So things like the structuring of the vehicles that the money flows through into the companies that you're funding, how you handle your carried interest, so your share of profits on exit and all that kind of thing. So kind of fund administration, but fully digitized. And then, but there's obviously just the US is a massive market. We don't think anyone's really offering a product that amazing other than kind of Angel List and Sidecar, who we would see as like the two really great players in the States. There's Carter as well. They're slightly positioned in a different way. And we think there's a lot of white space there. We also think as a European firm, you got to think from day one, I think, about being global, because usually your core market is not enough. And I think in venture, that's really important. Even if you look at like US funds, as they scale, they tend to develop more complex structures where they've got like Cayman, offshore, that kind of thing happening more. And you need to be able to service that. Yeah. That's why actually the angel lists and sidecars of the world are only a tiny slice of like the fund admin market. It's actually owned by all these businesses you've never heard of. We're super excited about going there. Mary's in New York for whole of Q2. We've got a cool space in downtown Manhattan. We're running events there. There's Tech Week in New York in June as well. So we're going to do some cool stuff with other people. The Delaware product also works really well for regulated firms in Europe. Make sure it's built in a way that complies with the regs here around AFMD and collective investment scheme regulation, for those who will know. And that's why we decided to launch that actually rather than like a Luxembourg structure or something like that first. As you can see, it's kind of like there's so much more pull with that market, but also it works well as a structure for customers here.
And this thing must be like, it must be hotter than ever, right? Like we're seeing so much stuff in the news around like how do we get access? How do people get access to these public companies, right? We're seeing valuations of what would typically be a company at IPO day and beyond, but in terms of like private valuations, right? Like a lot of people are just banging on the doors trying to get in, and some of them are getting hurt as well. Like it's a good thing that you guys had this sort of proper structure put in.
The secondary market is interesting at the moment on the late stage stuff. Like there's very big spreads on valuation, which is usually a bit of a sign of like, okay, there's a lot of uncertainty here. So it's somewhat bubbly, right? Like someone's willing to pay 20% higher than someone else is willing to sell at, or the inverse is true. But, when you're seeing that, I think, because it's quite liquid, the late stage stuff, right? Like it's fairly visible. It's all moving around. I think that's interesting. You also saw those guys who listed their fund, and that got you exposure to like Anthropic. And then they popped massively, and then they like dropped again as well.
That was nuts. I saw that. It was like 10% of the fund had exposure to OpenAI, 10% had exposure to Anthropic, and then I think Anduril might have been in there as well. Like these sort of classic like private companies. I saw that. That was interesting. I couldn't believe what I was seeing. It was like 900% in like like 3 weeks, 2 weeks.
I mean, honestly, like Dan, who writes for us, and he wrote a good piece about how people should just IPO like earlier, and that would probably be better for like the businesses, the market, everyone. Obviously, it's not really the way incentives are set up. Like, especially with the mega funds, it's like that they've got an incentive to keep things private, deploy more capital.
Like why would you need to?
But also as a founder, right? It's like, okay, if I stay private, I'm not beholden to like quarterly, right? Like my stock price and to the media and
can move quicker per se.
Kind of in theory. I think there are counter arguments around like being beholden to people making you ensure your business is like a bit more robust and resilient, and not so like growth at all costs focused, which means if funding dries up, things can go south very quickly. So you can end up building a business that's more brittle. I also think the problem is just like stuff gets really pumped. My worry is businesses start IPOing this year. Like if the window opens once Anthropic and SpaceX, and these guys go public, the hype dies down. Everyone realizes we're in a recession. Things tank, and retail as usual gets left kind of like holding the bags, which would be disappointing. And I think a bit concerning given like the macro and growing popular unrest about the wealth divide and that kind of thing. I don't think that'd be a good thing, but
we were saying like, sorry, go on.
I was going to say, what did you think about the when I think it was OpenAI offering their shares on on the exchange? I can't remember whose exchange it was.
A crypto exchange.
No. Do you remember?
Robinhood tokenized OpenAI and Anduril, but they didn't do it with permission from either.
But it wasn't it after the on their last private round they offered they had like an ETF that you could go and get exposure to. I think it was OpenAI.
It's interesting. I wonder how much of this is like it's a pain and it's expensive to go public. So you had like SPACs in 2021, which is like they were kind of invented to solve the same problem, which is like, okay, you just set up a shell company, which is really easy to list, and then you reverse a company into it. I think the tokenization thing is interesting. You guys should talk to like Alt, who are doing Control Alt, they used to be called, who are doing interesting stuff in that space. There's a lot of that happening in private equity as well, which is like taking a fund or investment vehicle that's like a private investment vehicle, like a special purpose vehicle, and then putting that on chain basically and making it tradable. I think a lot of that is like a workaround for the fact that regs don't make it easy to list things, and it's kind of like you're making it public without making it public, right? If it's like a tradable token. Doing it without the permission of the companies is interesting. Maybe that's what happened with OpenAI, and then Sam Altman was saying like these shares are invalid because we haven't given you permission to
I think like Anduril were also pretty pissed off. I think Anduril were the main ones that were like, hey, I don't remember, like this has nothing to do with this. So then it's like the consumers are like, what the hell? Like what are we buying here then, right? Like it's a bit weird.
It was so as of April 2026, retail investors can gain indirect exposure to OpenAI before its IPO through select ARK Invest ETFs, which hold roughly 3% stake in the company. Essentially, I think there were 3 or 4 ETFs, ARK ETFs, that you can invest. You can invest in that fund, and you'll have exposure to and it has exposure to OpenAI. And essentially, it was we keep talking about the OpenAI narrative, right, where they're basically trying to allow they're spreading goodwill to retail investors, saying, hey, look, come and get a slice of the pie. Like we're willing to go through all the this admin burden, which I imagine it is. Getting a private company stock onto an ETF, it's just more work generally. We're willing to do that to make sure that retail investors, get a part of the upside when we do IPO. Because at the moment, obviously, just private investors are able to do that.
I mean, the way the regulation is all kind of set up is a whole other piece as well, right? Like in the US, you need to be accredited, which is like a certain hurdle. They are introducing regulation in the US where you can like basically take a test and then be considered accredited, even if you don't have like, 250K in annual income or whatever the threshold is. In Europe, it's actually a bit easier in some ways to invest in single deals. You can say you're like sophisticated or high net worth, be a member of an angel network. In the UK, slightly different in the EU, but there are similar exemptions. What's weird in Europe is it's really hard to invest in a fund. Like in a venture capital fund, by default, like it's for professional investors, which is quite a high threshold. You can request to open it to retail, but it makes it a pain on reporting. And then also it's really hard to market your fund like Europe-wide or can be. There's a lot of ways in which I think we should reform the regs. Like one of the reasons there are so many VC firms in the US is it's really easy to start a fund.
Interesting.
The barrier to entry, the level of regulation, you can basically register as something called an exempt reporting advisor, and then you don't need to file with the US equivalent of the FCA, really at all. Whereas here, it's like it's costing you kind of at least 50 or 60K a year in regulatory hosting, just to get started. So if you're trying to do like a $3 million fund, you're already like 600K in the hole over a 10-year fund life cycle just on reg and compliance.
Damn, that's interesting. I didn't know that. Yeah, that makes something like, why is that barrier to entry so?
That's why there's so few emerging managers in Europe. Like, it's impossible to raise a fund of less than $10 million. Anyway, we're going to lobby on that someday. It's a separate matter.
You got my vote.
Let's do some quizzing.
Yeah, we mentioned some trivia. We mentioned trivia the other day. We got 3 mins, but we can let me play the trivia music intro because I love this stuff. Can you hear that?
Here we go. It's trivia.
Nice.
Right. Welcome to True or False Venture Capital Edition Trivia Quiz. I'm your host today. I'm taking over. All right.
Let's go.
Question 1. According to a study, so true or false? According to a study of 1,980 exits, there is no meaningful correlation between the early round sizes, seed and Series A, and the eventual success of a startup.
False.
True.
So the answer is true.
Come on.
It actually makes logical sense when you think about it, right? So like, if outcomes were predictable, everyone would pay more because that would lead to better outcomes, right? Like if there was a correlation between investing more and that leading to a better outcome, round sizes would just inflate. But it's not how people think. So if like a round size is big and the deal is hot, like it attracts more
follow
capital,
on, right? Yeah.
More likely to think at the time it's going to be successful. We see this in the SPVs people invest in all the time. But there are so many examples where companies have gone on to be huge and are like scraping together their round. Spotify's Series A, for example, they went around the houses of like every investor in Europe, a lot of the Valley. Eventually, North Zone and Creandum funded them. Like in the very early days, North Zone spent 18 months trying to put together the rest of the round, and people kept dropping out. They put together Syndicate 3 times.
Wow.
Yeah. And now, I don't know what Spotify's worth now, like 80 billion, their market cap, something like that. And yeah, I think that's interesting.
That's really interesting.
109 billion. Oh, that's insane.
109 billion, right? That's way under.
Let's go. Next question.
Okay, true or false? Solo founders are 2.3 times more likely to pivot than teams of 2 or more co-founders.
No, I would say that's false. I think teams with co-founders are more likely to pivot. So I'd say false.
I'm going to say false as well.
You're right. It is false. So the exact opposite is true. That's from a 2011 report on more than 3,000 companies. So it's
more cooks in the kitchen, more
ideas.
More arguments. But exactly. Also interestingly, startups that did pivot once or twice raised 2.5 times more money and have 3.6x better growth, according to this report. I don't know how they're defining growth, but like what's interesting there is like often your first idea isn't your best idea, right?
Sure.
Iteration.
Well, they always say, the first idea is never the thing that works or is the last idea.
Yeah, exactly.
I mean, obviously not all the time.
100% of the time. What's next question? We have time for one more.
Let's go one more.
Sorry,
Right.
misfire.
Wrong question.
Right, have we got time? Yeah.
Yeah.
True or false? A 30-year-old founder is nearly twice as likely to build a company that IPOs or gets acquired as a 50-year-old.
I would say that's true. Oh, wait, actually, no, because I feel... No, we're going true, just because they got more juice,
Right. So it's false.
No.
This depends a bit on the data you look at, right? So there's 2 reports I'm going to talk about. So the average age... So there was a big MIT report that was done about 10 years ago, and they found and they looked at not just tech, but, small businesses in general that get to an IPO or acquisition by private equity or, whatever, or, a corporate. The average age of the fastest growing companies was 45, not 22. And a 50-year-old founder was nearly twice as likely to build a company that IPOs or gets acquired as a 30-year-old.
That's interesting.
That's from a 2014 study from MIT. But if you compare it to like a recent study that Antler did in AI startups, the average unicorn founder in AI in 2024 was 29, and that was down from age of 40 in 2020.
Wow.
I don't know how big the data set is they're using for that, but very interesting. So, either, and maybe it's like tech, we index younger, but it's getting younger and younger.
Yeah.
So, either something interesting is happening specifically in AI, where it's like different traits or there are advantages to youth are becoming more valuable, or maybe we're biasing towards the wrong things or mispricing things. And there is the kind of stereotype or narrative of like the dropout founder, right? The Mark Zuckerberg, kind of story. And I think that's a compelling story. And it might be that it just doesn't map to reality.
But I think it's becoming more...
Unicorn valuation does not mean IPO or exit, right?
Yeah.
It just means we've chosen to value the business that way.
Yeah. Well, I think Max Allegori, he's at what, 27?
Yeah, and he's a beast. But we are out of time. Paddy, it's always a delight to have you on the show. You're welcome back anytime, and let's get that trade deal in the books as well.
Pleasure, guys. Take care.
Cheers. Have a good one.
Ciao. See you again. Awesome. Good stuff. Before we go, our next guest on Framer, build better sites faster. Go to framer.com/ETN.
And we are bringing in Paul Ryan, co-founder and CEO of Otel AI. They have some news. They've raised a bit of money.
Let's go. How's it going, sir?
How's it going, man?
Yeah, I'm good. Thanks, Mel, for your time. Big fan of the show.
Thank you for joining us, and congratulations on the announcement. Do you maybe want to walk us through it? What is the big news you have to share today?
Yeah, so we actually closed it in November, but just decided to announce it 2 days ago. We closed like a pre-seed round with Playfair in the UK for 2 million. We previously raised 800 grand with Nebula in the US, and they reinvested in the business alongside Angel Invest and an Irish fund called Baseline. So yeah, we're delighted.
Dude, let's go. That's so huge. And then reasons for, were you guys just like operating in stealth for a little bit, working for like a strategic time to make the announcement? How come?
Yeah, I don't know. I think we just wanted to keep our heads down, to be honest with you. Didn't want any of the distraction. Our plan is to try launch now next month. So just trying to build a bit of momentum now into building the brand, making people aware that we exist. We're working with a couple of hotel groups in the UK and Ireland. It's sort of go time now next month. So we're super pumped.
Let's go. You love to hear it. And I get like Otel, break it down for us. Like, what is the core product? What is the founding story here? What is the problem you guys are going after?
Yeah, so like if you imagine you're like a hotel general manager and every day you have to walk in at like 8 a.m. and your job really is to understand what happened yesterday, what's going on today, and do I have any problems in the future? And you're kind of stuck into 5 or 6 different systems. You've emails, PDF reports, Excel spreadsheets. Whereas what we're doing now is we're providing a coworker that sits on top of all these hotel systems. There's quite a lot. And when you walk into the hotel, you're not looking at data and trying to figure out, is there a problem? We just surface decisions for you to make. So creating opportunities for you to like increase revenue and decrease costs. And kind of the story behind it really is, my background is in like finance and probably not so sexy KPMG corporate finance. But I spent 2 years, we tried to IPO a hospitality group here in Ireland. And I kind of saw firsthand the challenges hotels face with getting access to like simple questions. Everything required a download, a PDF, Excel manipulation, and knowledge workers that are champions in those systems. So fast forward to 2024, I was helping a friend acquire another hotel just in my spare time, and it was still the same problems. It was like, a simple question could take 3 or 4 hours to get the answer to, and naively, I suppose, myself and Nick decided to quit our jobs, and we tried to speak to any hotel that would meet us in January and February last year. And we started to see that like a lot of the big groups were hiring like data analysts or Power BI analysts to solve the problem. So we kind of thought, what if we could build, like initially it was like positioned as a data analyst, and it's kind of pivoted along the way through feedback to sit alongside hotels. Excuse me. So yeah.
Dude, that's so cool. That's so awesome. I always love hearing like, these areas that during this like AI rush, during like all the hype cycle that may not have like got over, like they may have got overlooked slightly, right? And like there are these pockets of, I guess, like chaos is probably the wrong word, but like pockets of like disarray in these established businesses that would like, I guess, really, really suit something like this.
Big time. Like hotels for years have like invested really heavily in their systems. So like an average hotel might have 8 to 10 different systems, but like none of them talk to each other. So you've teams that are spending like hours every morning like analyzing data, and it's really like, it's not a data problem, it's a capacity problem. So there's things people would love to do, they just don't have the time. Like they want to spend time with their team or their guests. So like what AI has been amazing at is being able to solve that problem. So they don't have to have that mental anxiety of, am I missing something? Are we pacing behind in 6 months' time? Is there an issue with payroll yesterday, or is there a theme coming around with like particular guest complaints and with a potential issue with the room that I'm just not aware of because I haven't been checking those systems to find that out?
Yeah. No, that makes complete sense. I don't know when I found this out, but I think it was maybe after I watched The Grand Budapest Hotel, which is one of my personal favorite films of all time. But like some of these individuals that will manage these hotels and run them, you need a degree to do that. Like there are actual degrees in the US that they'll go through, like 3 years of like academic work, and then I think a number of years of like hands-on like field work, like actually studying how to like coordinate and like operate these massive, complex, I'm going to call them systems, but like they're hotels in this instance, right? Like it's actually an incredibly confusing task.
Yeah, like there's some amazing colleges. Like Ireland's kind of got a renowned college, the Shannon Hospitality College. So yeah, people they come out of school and they go in there for 4 or 5 years, and then they work from the ground up to like positions of seniority, and yeah, like it's such a tough job. Like people are facing in hotels. It's like I said, they're surrounded by systems. They want to spend time with their team, their guests, and man, there's only a certain amount of hours in the day that they can do everything and anything. And yeah, that's kind of the problem we're trying to solve.
Yeah.
Where you guys are obviously operating in the services industry within hotels, where do you feel like kind of, I guess, AI can help in other industries, right? Like you guys are solving for a specific problem. Is there a world where AI just gets so good that it's able to solve so many different service issues within different industries?
I think it depends. Like, say in our particular instance, like we're not trying to replace people per se. We're trying to like augment their capacity. So we're sort of saying like same team, same systems, but like with us by your side, you can 10x your output. I guess, with the likes of customer service, there's a lot of automation that can be done. Like in the instance of like hotels or service industries, there's still a lot of context that sits in, meeting rooms. And if you're not getting that context, then it's very hard for AI to really solve all those problems. So our thesis really is that we want to sit alongside hotel teams, but I still think depending on the vertical, there'll always be a requirement for like humans in the loop.
Yeah. Is it like a crazy like problem that like you've been, I assume there's probably some maybe initial design partners work. You've been working hands-on with a couple of clients already, helping to sort of like iterate on the product. Is there something mad that you've seen that you've been like, how is this the way that this is being run at the moment?
Yeah, like we kind of, when I said to you at the start, started working on this in January, we kind of actually didn't even start to build the product until June and like late June, because we just wanted to like attend internal meetings, workshops. And I guess what's kind of crazy is like hotels have spent so much money on technology and they have some of the best vendors in the world, but yet teams are still on Excel spreadsheets and they're doing tasks every day just because that's the way it's always been done. So I think that's kind of what excites me most, is being able to empower people to automate tasks and give them time back, but also being able to like surface opportunities for the hotels.
Yeah, for sure.
And,
sorry, go on.
Is the adoption within these within these hotels where I guess I don't know how much kind of AI is being used within the hotel industry, but is it quite a prevalent thing where it's like, oh, we need to go and do we need to be using AI because it's so useful, or is it an education piece from your side? What are you seeing now? You're kind of going to market.
That's such a good question. Like 12 months ago, it was I think respectfully, not too many hotels that we were coming across were even like using ChatGPT or Claude in their like day-to-day use case, but that's changed just massively. And now hotels are understanding the art of the possible through using AI. And there still is an element of education. There still is a sensitivity that ultimately it's a front-facing service industry where they want to protect the relationship with the customer. We on the other hand are more focused on like back office tasks. So yeah, it's definitely, there's far more appetite to understand and learn. But yeah, hopefully we'll keep improving.
Yeah.
Nice. And then I guess like the cash, like what's the plan? Is this, how do you think you're going to deploy the capital? What's the plan looking ahead?
Yeah, so what are we? We're like a team of 14 now, based in Ireland, a couple of guys working remotely. I think for us, it's to start going into new markets, start expanding our team on the product side of things. I don't think we want to go too aggressive on the team side. We're like, our focus really, like any startup at our stage, is like product market fit. So I'm not sitting here saying like we've sussed this, like we still have a lot to do. So it's really start getting out there into the wild and getting people using the product into new locations, learning, iterating, and just trying to improve the product, and then see where we are in 6 months' time. But yeah.
Is there like a, let's say like you're like sort of looking at a hotel, trying to work out how much they would need the software. I mean, yes, you could probably set up a meeting and chat to like the general manager of the hotel, but can you like send in one of the team to stay at the hotel and just see like, hey, this sucks. Like we should probably help these guys out, sort of thing. Like, do you guys ever do that? Like a field agent type stuff?
We're in a hotel here at the moment. I probably haven't done it just like that. I do get texts from friends who are like, "Oh man, I'm just been queuing for 20 minutes at a reception. You need to solve some sort of issue there." But what's interesting is there's so many commonalities, and again, whilst it's a fragmented sort of tech ecosystem, there's still a lot of the same players that come up time and time again. So, we work with a couple of hotels that are using certain systems. And I was actually in Eindhoven on a family trip. I took her kids to this like theme park, and I was checking in. I was like, just out of curiosity, what property management system are you using? And then I was like, so I find myself like really curious as to like what systems, like we're not at restaurants, like what point of sale system do they have, what PMS systems they have, but we haven't gone that extreme just yet, but it's a good idea.
That's so cool. That's so interesting. Yeah, I mean, like, I guess that, you're like, the kids are at the theme park, you're chatting to the guy running
you're
the line.
in theme park asking about POS systems.
Yeah.
That's so funny.
It's not good.
We've got about like 60 seconds left. Like where can we point people towards? Where can we send people? Website, products. Like what have you guys got coming up so that people can look forward to?
Yeah, so definitely the website otelai.com. Starting to sort of push more like educational content on our LinkedIn, and then we're hoping to sort of do like a product launch video in about 2 or 3 weeks' time. We're just working with a big team in the US on that, and then it's go time in May. So yeah, that's nice. Where you can find us.
You love to hear it. Look, Paul, thanks for spending time with us. Congratulations on the raise as well. And yeah, wish you guys the best of luck.
Legend. Thanks, guys. Really appreciate it.
Have a good day.
Great to meet you.
Top man. Ciao.
Before we have our next guest on the infrastructure for the Unchained World, go to base.org. Now we have Mr. James Wise.
Let's sound the trumpets.
Here we go.
Sound the sovereign trumpets.
He is the chair of UK Sovereign AI and partner at Balderton Capital. James, how's it going?
I'm great. How are you guys?
We're good. Welcome back. It's so good to have you on again.
Yeah.
Friend of the show.
When I first did this show, a few months ago now, I didn't think that we'd be setting records for the number of times I came back. But no, I'm very happy to be here again.
No, it's our pleasure to have you. We're always super lucky to have you on, James. There is so much going on. Maybe where should we start? I think a quick refresh on the SovAI fund. What is the focus? Where are we at today? And then we've got a bunch of questions. And we're also going to ask some harder questions as well, just as a heads up. So let's go from there.
Always like the hard questions, I get. So, 4 months ago, I joined as chair to help set up this unit. It was something announced in the AI Opportunities Plan, which Matt Clifford set out last year. And today we're officially launching it. As a reminder, it's a £500 million commitment from the British government to invest like a venture investor, just with the strength of a nation behind it, into AI successes in the UK, right? So we're here to accelerate the success of AI companies. We're predominantly going to be working with relatively early stage companies, viewers may be thinking sort of seed and series A, investing directly between 5 and 10 million pounds, sometimes a bit more, sometimes a bit less than that. And sometimes we'll also be working with some of the real breakout companies in the UK as well. And we're running it as a fund. We'll be investing in 40 or 50 companies directly. But beyond that, we have a lot more than just capital to provide. And this evening, we'll be announcing some of the first investments we've made, because while we're officially launching, we've been building this airplane while it's in the air. So we've been working on investments as well. And so we'll be announcing some of our investments, but we'll also be announcing some of the first recipients of the compute we're offering as well.
Okay, awesome. I guess so. I'm a founder. I've sort of sent my pitch deck into SovAI. I'm looking to take advantage of your guys' network and the capital that you have. What should I expect from SovAI? What should I expect as a founder coming in?
So first of all, one of the ways we've been set up is to have a completely independent investment committee made up of people out of the venture industry, right? So we've got Josephine, who you may know already, who previously was a YC and sort of Google and worked in an early stage venture fund. We'll be announcing another managing partner relatively soon, who also comes out of the British venture industry. These are people who are professionals and have been investing in venture for 10 to 15 years. So you'll get a full professional venture experience. The IC is completely independent, so they'll be able to get you to term sheet incredibly quickly, and we're going to match commercial terms, right? So if Index are leading your investment, or if Local Global are leading your investment, or if Notion are leading your investment, we're going to match those terms. And sometimes we'll lead and sometimes we'll follow. So that's the experience you'll get, like any venture fund would offer you. However, we've also got all these other levers we can offer you, right? And so that includes millions of GPU hours of compute we can give you directly. And this is domestic compute. This is running on Isambard, the UK supercomputer. You will be getting, good British compute out of Bristol, out of Cambridge, out of Edinburgh, to build your systems on. And as you will know, as an early stage AI founder, a lot of your early costs are compute, right? You do your seed round, you do your Series A round. We know a lot of that's going straight on compute. So we're going to provide that to you. We'll also be doing bespoke work on data, bespoke work on talent, so things like visas, and bespoke work with you on government procurement, where the government is your customer, to make sure that we bring a load more than a traditional venture fund would offer as well.
Wow. We were at 10 Downing Street last week, and we were kind of blown away by
a bit of a brag.
Yeah.
Just had to drop it in there.
Just had to drop it in there. That was part of the script down here.
Note to self.
We I didn't mean to do that. We were at 10 Downing Street, if anyone didn't know, last week, and we were just genuinely blown away by the how kind of tech native, I guess, and frontier people at the front in government are with AI. I wanted to ask about what's the difference between SovAI and what the government are doing. Where's that gap? Is how are you guys bridging it? Because we were totally blown away. It was awesome.
Yeah, well, we're fortunate to have all of the advice from these brilliant people working at the frontier here. We work closely with AC on what they're doing in cybersecurity, so they'll be helping inform us on the kind of British AI security companies we should invest in. Jade Leung, the Prime Minister's AI advisor, sits on our board as well. And so we have this input from her. We have input from people working with the national security agencies, people working with the Emerging Technologies group here. And we're literally based in the building. I mean, I'm in the Department for Science and Technology as we speak. And that's where the team will be based. And so, we get all of this incredible insight from them, which is great for helping us decide which sectors, which focus areas we're going to invest in. And we'll announce those tonight as well. And it'll also be on the website. But the quid pro quo of that is we get to speak to these people about what founders want, right? So yes, founders want capital. We know that this capital makes a difference. Perhaps, people will say, how much of a difference does £500 million make in the grand scale of things? And we can debate that. But far more importantly, we now have the Minister for AI and the Secretary of State for DSET meeting with founders, sometimes from day one, and hearing from the ground, this is what would make my life easier when I look to scale in the UK. And so, we're trying to provide a bit of a front door to make sure more people get access, more important companies in the UK get access to both the government's thinking, so they know the direction of travel, but also so the government can learn, what does industry want?
Yeah,
sure.
Amazing. And it looks like we're taking, again, as Luke mentions, we've seen it firsthand, the amazing steps that we're taking towards this this future that we very much want to be a part of, and also like a leader of as well, if we can make that happen. So I guess my next question is, can the UK build frontier labs? Do we have what's necessary to do that?
Yeah, well, so look, there isn't a frontier lab in the world that's worth its salt that hasn't opened or expanded an office in the UK over the last couple of years, right? You saw the announcement about Anthropic today and OpenAI this week, expanding their labs. Google has invested heavily here. They're about to open these huge new offices full of AI researchers as part of their expansion of Google DeepMind's expansion here. The list goes on and on and on. I think you would struggle if you're a US AI company. Your next stop is the UK, right? So we're already attracting these brilliant engineers and from Frontier Labs. We are home to Google DeepMind, one of, if not the most important frontier lab in the world. And so everyone, that looks pretty good from that perspective. So how do we do that domestically? Well, first of all, we do have Frontier Labs here, right? 11 Labs is the world-leading frontier lab when it comes to AI for voice. Wave is one of the top 3, you would argue, frontier labs in the world when it comes to embodied AI. Isomorphic is, or will be, certainly in my view, one of the frontier labs when it comes to life sciences. And the list goes on and on, right? So you can talk about material sciences, you can talk about avatars, you can talk about geospatial intelligence and AI in that field. Frontier labs are being built here. And we're very fortunate that not only are those ones being built domestically, but we have all of these international labs setting up here so that SovAI and the many great venture funds here can invest in those engineers should they wish ever to found something themselves.
Yeah, no, amazing. It's a very good time to be working and building in the UK, particularly in AI. Now we're going to get into some harder questions. So prepare yourself, James. Get ready. They're going to be coming at you quick. 500 million. Is this meaningful?
So look, first of all, for any founder, if you ask for more capital helps, right? It's very rare that more capital is turned down. So you can look at the headlines, you can look at some of the tech press, you can listen to some of the numbers you guys throw out there and get a bit lost in the noise, right? Not every founder needs £1 billion to succeed. Not every founder can get £10 million to get going. So it is meaningful, right? £500 million is meaningful, but it's the entry ticket, right? We know that. We are the tip of the spear. And UK AI companies in the last quarter raised £6 billion, I believe, 3 times what we did last year, more of the whole of European, continental Europe at least, combined. And so there's a great private market here. The £500 million is helpful there, and it will move the needle, but it isn't totally transformative on its own. But we're the tip of the spear into a much larger pool of capital, right? So already, and you'll hear some of our first investments tonight, already we're working with some of the leading UK-based and international venture funds, and those relationships will be incredibly valuable for crowding in more money over time. Plus, we work hand in glove with the British Business Bank, right? We are one of the ways you get a hotline to the British Business Bank. We're joining our CRMs together using an AI native CRM, a British AI native CRM, and we will make sure that should you need the £100 million round, the £1 billion round, or even the £10 billion round to be a global success story, that the rest of the British state, all the other public finance bodies we've got are looking at you from day one. So look, I won't lie, the UK needs a huge amount of capital to compete in AI. Luckily, we're going in the right direction, right? There is probably nowhere outside the US and China you can raise £1 billion seed rounds that we're seeing here outside of the UK, right? We are in the mix in that regard. The £500 million will help, and we're going to do a lot more.
Yeah. We've talked about the frontier labs and the number and kind of wide spectrum of frontier labs being built here, either domestically or coming over here. I wanted to ask about the compute. What is the kind of the state of compute in our infrastructure? Is it kind of enough to be able to kind of service the amount of kind of AI labs coming over here and building here?
Yeah, so there's a commitment in the AI Opportunities Plan that was published last year to massively increase the amount of compute that we have in the UK. We've announced AI growth zones to make it cheaper and faster to build data centers here to provide that compute. And we want a diversity of compute, right? The critical thing is that we have resilience and excellence. And resilience means no one party can restrict our ability to serve both great AI companies here, but also domestic needs, right? Government needs, whether they're for economic security or national security. So there's a plan in place. There's a lot of investment going into it, but we need to do more. There's no doubt about that. Our starting point at SovAI is we are allocating millions of GPU hours to companies from day one on domestic compute, and we're obviously scaling that up. So I think that it is a completely fair question, right? It's one of the critical questions that we have to get right. How are we going to service these AI companies? We are going to support them more. We're doing a bit today, but absolutely no one is saying mission accomplished on this, right?
Yeah.
Very much the opposite. We're saying spades in the bloody ground. Let's go.
Yeah, hell yeah, hell yeah. Another kind of, we're loving these tough ones, these quick fires. Anthropic and OpenAI, can anyone best these guys in the UK?
Yeah, they're phenomenal companies, right? And if you look at the history of Anthropic and OpenAI, there's plenty of British people and sort of internationally research who've gone and worked for those companies to build these reasoning models, right? Obviously, Gemini and Google DeepMind, the team who have contributed a huge amount to Gemini and develop a lot of Gemini, are based in the UK. So I would say, already we have a global leader in GDM, which is significantly based here and building with researchers here who are competitive. And then there's a bunch of international open source models out there, some of them produced by China, some of them produced by France, some of them produced in the US, which are also proving to be pretty competitive. So in terms of reasoning agents, I think Anthropic and OpenAI have got phenomenal products, and we're really fortunate that they're hiring engineers here and that the UK government can use some of these tools in the right and secure way. But there are other options out there. If OpenAI and Anthropic were to collapse tomorrow, it would be painful, but I think we would survive it. I think the important thing for the UK is that we remain open, right? We don't want this to be like an insular thing where we just invest only in British companies just for Britain. We want the best companies we invest in at SovAI to win globally. To some extent, that will mean working with the OpenAIs and the Anthropics of the world. So we want them to be successful, grow the pie and grow Britain's share in it. And sometimes that will mean competing with them in certain products. So I can't say exactly whether or not there's going to be a startup that SovAI backs that gets to take over from Anthropic OpenAI specifically around reasoning agents. Perhaps that will happen. But if it doesn't happen, that's okay. It's still a huge opportunity. And almost everywhere we're looking in the economy at the moment, AI companies are having positive impact on productivity. Our job at SovAI is to make sure a bigger share of that goes to Britain.
Yeah, incredible. We are coming up towards the end of the conversation and the interview. I just wanted to ask, we were covering something earlier today, more of a fun one, I guess. We've been seeing this is now in the States, but a rebrand narrative around a lot of companies towards going into AI. Some very non-native companies, one in particular, a wool shoemaker called Allbirds has now rebranded to a compute provider. Any thoughts on that news? Did you see that? What do you think?
I did see that, and what's amazing is if you read Fashion Matters, which is the FT's fashion newsletter, it opened with, "Hey guys, we're doing AI now. What's next? Gucci GPUs and Zara data centers." I think it's a testament to the scale of the opportunity here that great entrepreneurs from any industry are seeing upside.
Yeah, we love it. James, thank you so much for joining us. We're absolutely pumped for all the work you guys are doing and can't wait to hopefully be a part of it over the months to come as well. Congrats.
Thanks, guys.
Cheers. Have a good one.
Congrats.
Bye-bye.
Awesome stuff. Before we have next guest on, leave our daily business banking behind with Airwallex. Go to airwallex.com. Next on the show, we have Dante Disparte, Chief Strategy Officer and Head of Global Policy at Circle. I think, Dante, can you hear us? Oh, we can't hear you.
We can't hear you.
Nope.
Just checking if it's something on our end. And maybe could you try leaving and then coming back in? Just see if maybe that helps. Thanks, Dante. Yes, loud and clear. How are we? I'll have to play the cha-ching sound because we got that right. Dante, welcome to the show. Absolute pleasure to have you here. Thank you for joining the European Technology Network. We have been looking forward to this conversation ever since discussing it a couple of days back with the team. A lot to dig in. Maybe for our viewers and listeners at home, do you want to introduce yourself, your role, and also Circle for those who aren't aware?
Yeah, no, sure. First of all, it's great to be on. I'm the Chief Strategy Officer and Head of Global Policy at Circle. Circle is the largest regulated issuer of digital money in the world. We have the largest regulated digital dollar called USDC, a euro stablecoin called EURC, and the largest tokenized money market fund in the world. And each of these products is now increasingly inside the regulatory perimeter. So very exciting time, lots going on in this industry right now.
Yeah, no, absolutely. We're seeing it from the noise we're hearing. We're seeing it from the people who are coming on the show. It's an incredibly hot topic. I guess to start off, let's talk maybe about, we can start with the FT piece. Let's talk about the UK and stablecoins. Would love to hear your reasoning for taking on this task and what your thoughts are and your approach to the whole situation.
Yeah, well, look, first of all, the United Kingdom and the City of London is one of the most important financial centers in the world. The Financial Times piece that I wrote recently, encouraging movement, is partly a love letter, frankly, to regulators and policymakers, number 10, number 11, and other stakeholders in the UK, because it's been years in the making. The United Kingdom right now sits between a series of rules for this industry in Europe on the other side of the English Channel, known as the Markets and Crypto Assets Framework. And on this side of the Atlantic, we have this novel new law that regulates this activity for stablecoins called the Genius Act. And in fact, one of the very first state visits for President Trump and his counterparts with Keir Starmer in the United Kingdom last year, one of the things that was brought to bear was this concept of a transatlantic task force on modernizing markets. And so the big point I'm trying to make is that as the UK Parliament and House of Lords is studying this question, Chancellor Reeves and many other stakeholders are trying to advance a policy framework. The United Kingdom actually has what I would call a second mover advantage. Get the best of both sides of the Channel and the Atlantic, but get going. It's time to start getting these rules in place to promote activity, investment, and the market more broadly in the UK.
We've got a couple of people on today, even later for this show in particular. A lot of the conversations are structured around sort of TradFi adoption or like just general sort of legacy is the wrong word, but like traditional enterprise adoption of this technology. What are the big blockers? What's getting in the way?
Yeah, well, I would don a suit and tie for this show any normal day of the week. But as you know, this week is the IMF World Bank spring meetings here in Washington. And aside from a big conversation of doom and gloom, I think the big prevalent topic that has been addressed so far, 3-4 days in, is tokenization. Every major household institution, public or private, from very large asset managers to the biggest banks in the world, to the biggest payments companies in the world, now can see the art of the possible. Because on one end, the technology has started to mature. On the other end, there's more legal clarity and regulatory clarity in key financial centers around the world. And of course, a lot of companies now see this as not just a competitive threat, which was the way they originally approached digital assets and crypto, but now they're actually starting to see it as an opportunity. So from BlackRock down on the asset management side to the biggest banks in the world, they're all really keen to embrace this technology and candidly to be on and off ramps. So this is the other piece of UK competitiveness that has been my message literally for years now, which is that the United Kingdom and the City of London ought to be the destination for this wholesale activity, if nothing else. Even if there's retail consumer protection concerns, although I would argue a good buyer beware, a disclaimer should be sufficient. Not being able to turn to the City of London for anything other than insurance placement at Lloyd's, I think is a real blunt instrument for UK competitiveness.
Within this as well, these are relatively quick fire, but there's just so much that we'd love to cover with you. Again, something that is getting a lot of attention right now is the emerging agentic economy. And when we say that, we mean how are these agents typically going to interact with each other? Should they have wallets? Should they be making purchases on behalf of human beings? People that are tech native are saying yes. People that are tech native are very excited about it, but they can't own a bank account, right? So what is the role of stablecoins in the emerging agentic economy that everyone's getting so excited about?
Yeah, well, in some ways, stablecoins originally were born as a stable payment innovation in digital asset markets where there were novel demands and therefore novel use cases and novel innovations were needed. But you fast forward to today, and I think the next big frontier breakthrough for stablecoins is going to be agentic commerce and economic activity. It's the perfect digital thrift for that because stablecoins from Circle, for example, USDC, is available on more than 30 blockchains. And so at core, it's software. And software will invariably speak to software, especially knowing that the stablecoin like USDC is connected to the global banking system. It enjoys liquidity all over the world. It is plugged into literally millions of wallets all over the world. And just to prove what was really possible using USDC in the nexus of agentic commerce, we ran the world's first AI-led, AI-judged, and AI-only hackathon with Claude bots last month, and it started off as a bit of an experiment that made people laugh at first internally, but once the agents literally got going, there was an economic flywheel of activity. The agents competed like they would in a traditional hackathon, and the best idea won. And the entire economy of this project was paid for in USDC and paid for in stablecoins. And I think that type of edge case might be hard for people to conceive of at scale. Mm-hmm. But so the question is not, will agents and agentic commerce be a thing? Because it's fundamentally software. The question is, how deeply connected will it be to different parts of the economy? And then frankly, back to the UK message, will the United Kingdom also be the domain that has innovated in the past in financial services and can be as relevant in the future as well?
Yeah. We've seen. Sorry.
We spoke to we spoke to someone who, at a human hackathon, they built an agent kind of ecosystem where all the agents wanted to do was build casinos, and they kept losing money. They elected a mayor, they elected, I think, a prime minister as well.
But I think within this as well, that there's a really cool example of, so we're discussing right now enterprise use cases for agentic commerce. But I was seeing the other day, there was a bloke somewhere in the US who'd set up a cohort of vending machines that was run by his OpenClaw agent, and they were making payments. They were sort of checking on where is stock at, what does inventory look like, what's my highest selling thing, and how do I go and purchase and have these Amazon orders coming and waiting for I guess the owner of said machines. So I guess it's not just applicable to enterprise companies as well.
No, not at all. In fact, I mean, none of crypto, blockchain is an institutional innovation first. In fact, the reason the institutions are starting to catch up, it's a little bit like the movie The Matrix, when the agent says, "Do you hear that, Neo? That is the sound of inevitability." And I think part of the reason there's this big institutional wake-up call at the moment is because people are now demonstrating the art of the possible, not at the core of the financial system, but at the very furthest edge from it, where it would have been impossible to conceive of you and I sending money to each other the way we would send a text message. Today, the technological barrier for that has been broken. And so, of course, that is at first a retail revolution. And so much of the actual development would skew towards developers and technologists, because this is genuinely software becoming a big core element of the global financial system and global economy. In some of the cases, remember, the first use cases for the internet were cat videos. You know what I mean? And it was a dark web before it became the very fabric of the global economy that it is today. But the internet had some massive shortfalls. The presumption of privacy, accrual of property rights. The financial system, of course, is still heavily intermediated. And that intermediation is incredibly costly. So payments, for example, it's a death by 1,000 cuts in order to execute a fast payment or a low-cost payment. And the technology is proving that the technology layer is no longer an obstacle, even if some of the use cases might seem potentially risky or potentially trite. Nonetheless, they show the art of the possible.
Yeah. How do these multi-trillion-dollar kind of AUM companies build the ability to, with all of this new technology, there are inevitably going to be new opportunities in terms of things that people can pay for that they didn't even realize there was an ability to be able to go and do that. How do these kind of multi-trillion-dollar AUM companies almost get in front of that and make sure that they build the foundation to be able to handle all of the other opportunities that they couldn't even foresee coming to bear?
Well, first, I've always taken the view that the internet was a truly disruptive technology, right? Yeah. And when we look back to the dawn of the internet, and if you were a media company, the best you could do was mount a firewall to not get steamrolled, and the alternative was you're going to end up owned by Amazon one day, like the Washington Post newspaper here in Washington D.C. That's a genuinely disruptive trend. The advent of blockchain, however, has, in my opinion, proven to be much more of an augmenting technology. And I think one of the major proof points of this is that, the crypto industry originally and the technology was originally born in the smoking crater of the 2008 financial crisis, in part to democratize finance and banking and payments for everyone in this totally decentralized manner. But isn't it ironic that over that same maiden 15 years, what you're finding is increasing participation from institutions. And what are the increasing unlocks, whether it's Bitcoin pricing or whether it's the use of stablecoins at scale, is their connectivity to the real economy. Hence the point, augmenting technology rather than disruptive. And I think of it more as a yes and storyboard, right? That you could have stablecoins processing trillions of dollars of near instant internet-borne payments, but that are also connected to the real economy and are also connected to cash. That kind of international and global economic equation, I think, is super additive. But in there, massive institutions, the global payment networks, Visa, MasterCard, and many others, literally all use USDC as a native settlement currency on their network. So yes, there is a disruptive potential to that onset. But for a lot of these companies, for a lot of these institutions, the technology itself analogizes to cloud infrastructure. Terrifying at first, but functionally inevitable. And I think a lot of the digital asset discussion is exactly that. Cloud infrastructure that has to be plugged into major institutions and major economies.
Yeah, sure. Brilliant. Let's talk about Circle. Circle's platform growth in particular, the launch of the Layer 1 blockchain Arc. Would love to get an update of this. How are things going?
Yeah, look, Arc is in some ways a response from Circle, the company that in so many ways sits at the very center of this internet economy, or what our CEO likes to call an internet financial system. USDC, as I'd mentioned before, is available today on 30 blockchains. Of course, through that experience of trillions of dollars of real world activity, we know both the opportunities, the potential areas of improvement, and candidly, the gap that the institutions of the world, public and private, see missing in blockchain infrastructure. So Arc is our response to that. It's meant to be a high throughput blockchain, much bigger than payments. We call it an operating system for the internet, or an economic OS for the internet. But also meant to be agnostic vis-a-vis the types of tokens and solutions that can be available on Arc. One of the core features, of course, is privacy. And one of the other really critical features right now is quantum ready. As we all know, the way technologies are not only breaking, but the way we're unlocking technological breakthroughs. A lot of this open financial infrastructure is critical, but it may face potential vulnerabilities. And so we're trying to address that at the institutional level and bring Arc to the world.
Yeah. There was something else that we'd love to discuss. I know we've got 1 minute left, so maybe we can make it the last question. But Circle partnered with OpenMind, a robotics company, to build the USDC functionality for agentic machine-to-machine payments. Slightly different to what we were talking about, about the agentic sort of agent to agent. This is robot to robot, if I'm getting this correct. Would love to learn a little bit more about that.
Yeah, again, it goes back to the, stable coins like USDC are literally the perfect medium of exchange and digital thrift for this machine-to-machine economy, as much as they are, I think, for this open internet economy. Anyone armed with a basic internet-connected device has a compliant payment innovation that they could use at world scale. And so, any one of those experiments that we have run, I think are really the blueprints for the internet of the future. Last quick word. You simply cannot have the economy of the future without the money of the future, and stablecoins connected to the real economy are it.
Absolutely.
Let's go.
So cool. What a way to sign off. We love it. Dante, thank you so much for spending your morning, I'm pretty sure, with us. Yes. It's been an absolute pleasure. We'd love to have you back on for any more future updates. Have a wonderful day.
Thank you so much. Cheers.
Good stuff. Thank you.
Great to meet you. Amazing stuff.
That was awesome.
Before we have our next guest on, Polymarket, the world's largest prediction market. Stay informed and profit from knowledge. Go to polymarket.com. Next on the show, we have Peter Pan. He is the partner at 1KX. Peter, can you hear us?
Let's go. Peter, what's going on? Welcome to the show.
Thank you so much for having me. I'm doing very well.
Hey, love to hear it. We're excited for this. Where do we start? Maybe intro on you would be great. Intro on 1KX as well. And then we've got a bunch of questions.
Sure thing. I'm Peter, a partner at 1KX. We've been 1KX is a firm founded in 2018, focused primarily on investing in early stage companies and token networks and crypto venture. I would say we lead / co-lead only. I think we try to take a counterposition view on the space. And I primarily lead a lot of the consumer investing at 1KX, but I also look broadly into block space. And yeah, I think broadly, work across the fund pretty actively, regardless.
Well, look, let's jump straight into it and ask. I mean, first question off the bat is kind of what are the consumer behaviors that you're seeing within crypto, broadly?
I think I would sort of zoom out a little bit. I think the state of crypto today is a little less about what is unique about crypto, but much more about where does it fit in the context of the world. Mm-hmm. And we're in a pretty interesting state of the world right now. It's utter chaos. Right. AI, I think, is the hot topic. It's effectively, I would say, concentrating leverage into specifically in the hands of who already has resources. Right. So it's sort of this class stratification on this consumer side. Effectively, a major economic sort of shift in economic conditions. Right. And if you sort of look at like the biggest shift in the past, or the biggest shifts over the last 20 odd years, you sort of look at the global financial crisis, like mass unemployment, what came out of it, gig economy, think Uber, Instacart, etc. There was a creative economy, right? Etsy, Kickstarter, YouTube really found its sort of peak heyday shortly after. COVID was very V-shaped. It wasn't so permanent, right? As sort of the GFC. But I think that, with AI and class stratification, we're seeing the biggest, like, I would say, evolution in consumer behavior that's yet to come over the next few years. And I think specifically like in two ways. It's sort of this K effect, right? You're going to have the upper class that's effectively entirely focused on life maxing, right? It's all about health, longevity, human connection. It's sort of this sort of post-AI world where online is solved, productivity is solved, right? And so you're just, there's data points around how luxury experiences are increasing in spend, right? Dramatically, even in comparison to like, let's say luxury physical items, right? And on the other end, I think what's really interesting, but also likely, I think more temporarily, I would say that, volatile would be the underclass to some extent, if you were to put it. It's sort of like AI is displacing work faster than ever. I think that we're still yet to see how it shakes out, but effectively that you're going to have a bulk majority of the population who are going to wake up one day unemployed, displaced, with more time than ever before, with less money than ever before, in a world that's more expensive than ever before, right? And sort of what do those people do? And I think that sort of like paints the picture of how I view consumer broadly, going over the next couple of years. So I think that like there's a lot of opportunity for future of work, new ways to make money that weren't possible before, especially outside of traditional, I would say, white collar jobs that sort of dominated labor market over the last 10 years. I think that people will have more time than ever before. What do they do? Outside of and I think that crypto is simply represents a platform for a new set of primitives that allow people to interact with each other in ways that weren't possible before, right? So what does that mean? I think that crypto is effectively the perfect rail to build new virtual economies, whether they look like labor economies, attention economies, that that are able to permeate further into consumer sort of life cycles and sort of the day-to-day life, right? I think this sort of like is a broadening extension of what we've seen of the GFC, is sort of like that really introduced the idea of like this gig economy. I think that the programmability of crypto really allows anyone to spin up and build very intricate, highly sophisticated work and labor and attention economies, right? And I think that entertainment for crypto is also, I think we're going to see work, entertainment, and finance sort of further blend, right? The lines have already blurred historically over the last couple of years. 21 of meme coins, 21 of NFTs, 2021 of meme coins. Is it finance? Is it speculation? Is it entertainment? I think that's where there's something new, right? And I wouldn't sort of like stop here to say that we know exactly what crypto is going to look like even in 5 years. But Yeah, that's at least how I sort of see consumer broadly over the next couple years. I wouldn't be so sort of, I would say, like alarmist to say that like everything is like absolutely cooked. I do I do see it as a reconfiguration of attention, time, labor, and energy, across consumers.
Yeah.
So where do these, if they don't have jobs but they have more time but less money, what then, what do you think could happen?
I think people are going to try to make money for whatever means possible. I think that this is sort of, we've seen like glimpses of this, right? Like during COVID, there was just, that's when the games industry really sort of peak. And obviously everyone over-invested into that trajectory, right? But I think that people will, outside of obviously apply to jobs, mostly to be like, respond. I think mostly to sort of get not a lot. I think that, we're going to see people really go further into the creator. People are going to look for new novel ways to make money. This is where I've changed my views on hyper-financialization with crypto. Okay. I've historically viewed it as some sort of like financial violence, if you will. Like sort of like no one ever says that it's sort of like a pure fan of violence, right? They say the UFC fan, right? They'll combat sport. and so I've always thought that like, okay, prior to sort of this, sort of AI cycle that's really starting to displace jobs, I always thought that like, okay, like a lot of this meme coin stuff was sort of like, too pornographic to some extent, right? To the average person. But I think that while I still have that general view that you need framing and a better story around crypto, right? I do think that as people become increasingly effectively poorer and struggle more, they're going to get rather pragmatic and far more open to different ways to make money with the time, attention, energy, right? And so that's a reason. So recent sort of reframing my thinking is that yes, still I'm still on the lookout for financialized applications, but I think the story matters a lot. And I also think the penetration of the initial user base matters a lot too, right? It's sort of like all these social networks in the 90s proliferate, but none of them took off. You could have built Facebook in the 90s. Why didn't that take off? It took the right social network, the right sort of initial beachhead to find penetration adoption, which was basically like privileged college kids that wanted to like, so I think it's really interesting timing. And I think that crypto is, even in its rawest form, show promise. And I think there's still a ways to go. But I think the timing is becoming better and better.
Yeah. And talking about social networks, you guys just announced your backing of Giggles. Can you talk to us a little bit about that investment and the thesis behind it? I think that was a super interesting kind of investment, especially with what you're saying now. So can you give us the thesis behind that?
Absolutely. At 1KX, we care about distribution. It's our thesis. Distribution is king. We've been focused on distribution this entire time, years and years before. We've been saying the same thing. Again, going back to timing, especially as well as user penetration, we've never really thought of product as really the bottleneck. It's all about distribution. And especially if you're building around such novel primitives and form factors in consumer crypto, you need to effectively iterate on what you're building over and over again so that, you need this muscle to distribute your product over and over again. You're naturally going to have this user churn, right? So that we've had this thesis around distribution for a while. And I think that's becoming ever more obvious and I think consensus, especially on what consumer applications broadly within and outside of crypto. And so Justin is a really interesting founder. He spent most of his teenage years online building, YouTube channels and Minecraft servers and running online meme pages and building his own agency around this, right? So it's quite similar to my background. I spent most of my teenage years since I was 12 building on YouTube channels, e-commerce sites. It really taught me how attention worked on the internet, right? And I saw the same thing in Justin, right? When I first found him on TikTok, effectively, I sort of I think that Justin deeply understands the younger demographic of, let's say, teenage to early adults very, very well. He is in that demographic. He's and built large scale social media followings and accounts that way. He's directly interfaced with this demographic. And I think more importantly, it fundamentally grokks the potential of what Web3 can enable, which are like new economies, new ways to financialize attention that weren't possible. I think the form factor is not yet solved, but he really, I think he's well positioned, right, to figure this out and distribute the right product. But more importantly, like go and penetrate a new audience that's never been touched before by crypto. I would say every cycle of crypto, you've seen successive, penetration towards younger and younger audience, right? So you can think of like Bitcoin, of like the boomers, et cetera, the Gen X, right? DeFi hit like all the, I would say, and anyone who like, traded stocks, anyone in finance, it's sort of, meme coins touched earlier, younger into sort of early 20s, but no one's really ever been able to publish and distribute crypto-enabled products, to the teenage crowd to a large extent, right? Mm-hmm. And I think you'll see evidence of that on the app immediately, in the sense that like, yeah, it's chaotic and weird. It's none of this forecast nonsense, where it's sort of like VCs handshaking each other and congratulating each other on the investments, and it's just like some LinkedIn technocratic nonsense. This is actually like weird stuff.
Sounds pretty fun.
I mean, a lot of people pretended it was a lot of fun, for a while. But I mean, you can sort of pretend, or you can actually build a product that actually, I think, looks a little weird. It looks a little strange. A platform that, is actually used by real people on the internet. Guess what? The internet is weird. The internet is not necessarily, I think, so white collar polished, right? And so I think the core thesis behind Giggles is really that like Justin is the right person to take crypto-enabled products and primitives into the new order.
Yeah, and can I ask, the funding size was $1,234,567, which, if you're looking at it on the screen, and you can probably tell it's 1, 2, 3, 4, 5, 6, 7. What's the story behind this?
That was news to me until it was published. we wanted to constrain the round, obviously, to 1.2, but I think there was a couple sort of notes afterwards of like, hey, there's some stragglers you'd like to get in. Sure. Yeah. I think it's a fun little Easter egg. Funny enough, the TechCrunch story and exclusive sort of came out the night before the first time ever. The journalist, I forgot her name, she reached out to me on LinkedIn, just verifying, because she got cold feet thinking the whole story was fake. So yes, it's fun.
I think it's brilliant. I think it's like they've somehow managed to use the amount of funding as a marketing ploy. It fits into the it's very sort of young tech native strategic like distribution stuff. It's all fitting together very well. I think that's brilliant.
Look, last question. I wanted to deep dive on quickly your thought on how you think these new economies, these new communities can be kind of tokenized and can create kind of new financing opportunities within them. Like you're mentioning that Web3 will create new communities and new places for people to interact. How do you think people can monetize those?
Yeah, I think like going to the core of it, it's digital property rights, right? It allows you to like create ownership over rather intangible items that weren't possible to be owned before, right? And so this looks like trust, this looks like brand, this looks like IP, this looks like attention. And I think that once the right playgrounds are built for tokenizing and exchange of value and interaction with these items and new digital objects, I think that it's going to create a new game for people to think about, like, how do you, it's going to create, I think, a new micro gig economy, if you will, around generating attention. If you're really, really good at, let's say, creating memes and movements and IP as a kid, like this is just the new playground to go play around with, right? And so I think that I resonate with this in the sense that I was early to Twitter. I was early to YouTube as a kid, way earlier than everyone else that came on board. And that was a whole new playground for me back then, right? So in many ways, a lot of this is also driven by like the curiosity of what happens to the internet itself as well.
Sure, for sure. Well, look, we're out of time, but look, thank you, Peter, for coming on and spending the time. We appreciate it, and keep us updated.
Absolutely, my pleasure. Thanks, everyone.
Thank you, sir.
See you soon. Before we have our next guest on, Framer, build better sites faster. Go to framer.com/ETN. Next on the show, we have Alex. He's the co-founder and CEO of Matter Labs. He was in the studio. Now he's gone.
We'll bring him back in. We'll bring him back
Alex,
into the studio. We've got Alex coming in now.
Alex, can you hear us?
Hello, sir.
Hello? Can you hear us?
Just checking on audio, but we are welcoming Alex Gluchowski, co-founder and CEO at Matter Labs, coming onto the show as we speak. Alex, how's the audio? Can you hear us? Can you see us?
Oh, awesome.
Amazing. Dude, welcome to the show. It's a pleasure to have you on. Thank you for joining us today. Maybe for the viewers and the listeners at home, perhaps like an introduction on who you are and what Matter Labs is as well.
Matter Labs is a company that was founded 8 years ago on the mission to help scale public blockchains with zero-knowledge proof technology, which is this amazing new breakthrough in cryptography that happened over the last 30 years, really the last couple of years. Took it to a whole new level, and I believe this is going to be something that will power all of the world finance in a few years. But we've been pioneers of this stack on Ethereum. We have contributed to a number of innovations in the scaling space, and now we're focused on the what I believe is the largest opportunity that crypto has seen in its entire history, which is the onboarding of the traditional financial institutions, banks, and enterprises onto blockchain rails.
Okay, this is a hot topic. We've been discussing it earlier on the show as well. When you say the largest opportunity, do we have like numbers of just how big this whole thing is? Like, how big would this be to enable these sort of TradFi institutions to, merge is probably the wrong word, but adopt this newer technology? Like, what is the opportunity?
I don't have exact numbers, but they are measured in quadrillions, if not more.
That's pretty big.
If you look at the full spectrum of what's at stake there, starting with payments and then going into deposits and tokenization of those, and according to some estimates, between 100 billion and some trillions of dollars are stuck in the corresponding banking system in this Vostra Nostra accounts that banks have with each other to be able to facilitate payments. Then you add to this RWAs, meaning the real world assets of tokenized stocks, equities, bonds, and so on. This is an incredible opportunity. This is orders and orders more than everything that we have so far seen in the crypto market.
Yeah. And you mentioned it there, tokenization in general, stablecoins and tokenized deposits. What is kind of at stake for banks? And also why now? They've had the potential to do this, I think, for a while, but initially met with a little bit of fear as the emerging technologies come out. But yeah, would love to get your thoughts.
Several factors are coming together in this exact time point. They haven't been experimenting with blockchains for a while, and they have gained. Banks are naturally more conservative organizations. They're moving a little slower. They are risk averse. They are testing things very thoroughly on a technical due diligence level. They have experimented with blockchain systems. Most of the large banks operate already today their own private blockchain systems that are normally based on Ethereum or EVM technology, and they use them for internal operations. So you can think of them as an upgrade over the traditional banking databases, because with smart contracts, with blockchains run in-house, even in complete isolation from the rest of the Web3 ecosystem, you already have the benefits of much stronger auditability, much better access controls, much better programmability as well, because you don't depend on a single bank system administrator to ensure the security of all funds, and someone can just add another zero to their account accidentally. This is not going to happen on blockchain systems, so they use it for internal. What was not possible was connection to other institutions, and there were structural and regulatory reasons for this, but a really large one was the lack of privacy and control. So the options they had or either we're going to build a consortium system where multiple institutions are coming together and we're going to operate it jointly as this private blockchain or closed blockchain between the number of participants. And these experiments have been attempted. But then all of these participants would see everything that's happening on the entire consortium. And then they have the questions about governance rights and who's going to manage this and adjacent legal questions. And this ultimately failed. Like they need to preserve true privacy between the two transacting parties. They need neutrality. They don't want to depend on others for their mission critical systems. And what's possible now on public blockchains is privacy is being enabled by zero knowledge proofs. And so now they can have the benefits of both worlds. They can have their own systems that are under their control, and where they manage access, they manage permissions, and can intervene if something goes wrong. Mm-hmm. And they can connect to other institutions with privacy, and they can also connect to public systems. And we see this, this tension between stablecoins and tokenized deposits is actually, in my opinion, going to result in a complete convergence. We see this already with some banks who are on the more forefront of technological advancements. They enable you to accept stablecoins and send stablecoins from your bank account. And tokenization of deposits, you can think of it as a bank-issued stablecoin backed by their deposits. It's not backed. It's actually like full representation of the deposit. Mm-hmm. It basically gives you the better interface to manage your bank money that you have on your account. Gives you 24/7 instant settlement, connection, programmability, connection to anyone else. And then once that becomes reality, and you have this conversion into this outer world of stablecoins with, again, instant settlement 24/7, this is where, for the first time in history, we start seeing the true Internet of Value emerging from these separate networks that are all connected together on the same plane, where the value can move freely and very fast. And if one thing happens, there will be many benefits of embracing blockchain rails. But the most salient, the most obvious one is going to be the increase in velocity of money, the increase in the ability to circulate. Because today you have crazy delays. You have in some cases you have still T+1, T+2 days, or even T+5 days. Yeah. You have these fragmented systems where banks from different jurisdictions, you would send money from your account on Thursday. It would not be processed because it's evening, and then on Friday there's a bank holiday, and then there is a weekend, and then on Monday there's a bank holiday in the jurisdiction where you're sending the money to, and you kind of caused a week of delay. And we're talking about trillions of volumes of enterprise business workflows where these businesses now have to think about this. They have to make this financial planning. They have to early on sell their treasuries, whatever they keep the funds in, because they don't keep it in cash. They would not earn any yield on that. So they probably have to sell treasuries. They have to pre-fund this account. They have to create this massive capital inefficiency with delays, and this translates to direct massive losses. And all of that is going to be recovered. Blockchains are going to make the world financial system just a lot more efficient from the get-go.
Mm-hmm. So what does that speed mean then in terms of you said it's just going to become more fluid, right? The kind of foundations of the system, I imagine, are they built for the volume of speed that's kind of like coming down the track?
Oh yeah, blockchains can now handle the volumes, the throughput numbers, the number of transactions, and they can support the value of transactions to very high amounts, because we now have systems that have been most adversarially tested in human history. Blockchain systems as IT systems, if you just treat them as computers, they have been tried, especially the more mature ones like Ethereum and EVM. They have been exposed to the most ruthless adversarial environment that you can imagine. And they have withstand the test. And of course, in the bank environment, they're going to be safer because you have additional guardrails, additional perimeters of security. So performance-wise, security-wise, and programmable convenience, developer experience-wise, everything is just way better than what you used to have.
That's a really interesting. I didn't think about that. Yeah, it's almost been forged in the fire, right? Like it's come from a point in which it's eons behind, like literal centuries. And then you have like the naysayers maybe when it's when any emerging technology comes out who want to bring it down and have probably tried to do that and attacked certain blockchains and tried to hack them and tried to mess with them, and there's a whole narrative around that. But that is just not the case whatsoever anymore, and you can see it in media headlines as well. When did this shift happen? Like I know when we spoke to your team as well, like we mentioned Jamie Dimon's recent comments about tokenization being the future of finance, but that's a big thing for someone in his stead to mention this and say this very openly and not really get any flack for it as well. There seems to be a stark shift in narrative. From outsiders looking in, it looks to be quick, but maybe for someone on the inside, it's probably been a bit more of a grind. Would love to hear your thoughts on that.
Look, it got a massive acceleration with the passing of the Genius Act in summer last year, where everyone got into massive urgency because the technology was kind of mature and ready and waiting for this moment since also quite recently. Then the change in the US administration, the much more friendly attitude towards crypto, and then the actual passing of the legislation, which is a lot safer because it will survive the future administration, even if the president has changed. The legislation is something that stays, and it's very, very hard to change. All of that contributed, and everyone got into this urgency race to figure out their blockchain tokenization digital asset strategy, and things are just converging. It's been a little over half a year now since things happened. Now we have an active discussion about the Clarity Act. We're nearing, I believe, the point where it will be passed, and it's going to be a huge enabler for the entire crypto industry overall, and another building block towards this Internet of Value.
Yeah. Mm-hmm. And what does the kind of I guess next 6 months look like? We're seeing a lot more kind of M&A activity and a lot of activity to move towards this from major banks. What does the next kind of 6 months look like, or at least the rest of the year?
It's going to be going from pilots to production. So there are many institutions have announced so far, mostly experimental activities.
Okay.
Very few have actually deployed full production workflows, and this year is going to change. This is what we're seeing. We announced recently a cooperation with the Carry Network and 5 US regional banks coming together to build tokenized deposits. They are launching later this year. There are many more initiatives that will actually go from this pilot stage to production. This is what I would expect.
Nice.
Nice. Yeah. What happens to the banks that don't go into production? Are there any? Will they, I guess, just be left behind?
They will. I don't think they will be left behind. I think they will be just like late adopters. Okay. Like what happened to banks that did not adopt internet?
Yeah,
they got
I don't know any of the ones that did, but maybe that's because they went bust. Dude, thank you so much for joining us. Just sort of last question, 30 seconds of the interview. Well, where can we point people? Where can we point viewers? Matter Labs' website, is there something that people can get excited for in the next sort of couple months? Like, where can we send people?
Yeah, what we're the core product of Matter Labs is the ZK Sync technology, and the ZK Sync project is what people should look up on x.com. And they can follow me at GLUK64 on X. X is where things happen.
Yeah,
indeed it is.
That's
good stuff.
A big agree from us. Alex, thank you so much for joining us today, and enjoy the rest of your day. It's been a pleasure.
Thank you, my pleasure.
Thank you. Cheers.
See you soon. Awesome stuff. Talking about Base, the infrastructure for the on-chain world. Go to base.org. Next on the show, we have the man himself, Zen Baynham-Herd.
Baynham-Herd.
Zen Baynham-Herd. He is the director of growth at Base. He should be joining us any moment now. That was a very interesting conversation. We've had lots of tokenization conversations today.
Yeah, and we're about to get into a couple more.
We've got a couple more,
and I'm here for it.
A couple more down the track.
No, it's been a crypto day, but I think it's nice to do a couple of these because we don't really get to do them too often. So I think when we can, it's good to cover it. But we've got Zen coming into the show right now, I believe. Let's see if we can bring him into the stream. He's a director at Base. Of growth. It's Zen. Zen, welcome to the show. It's good to have you on here. It's we've been really looking forward to this. It's a long time coming. For those who aren't familiar with who you are and what you do, maybe a brief introduction to you and your role.
They all know what Base is.
Our viewers definitely know what Base is, but maybe you specifically in your role at Base.
Okay, great. So I lead growth at Base, which includes growing the chain and growing the Base app and the community around that.
Awesome. And we wanted to start off the conversation by getting an update on what is the roadmap looking right now? What is the sort of midterm future look like? We're thinking maybe 6 months. What can we expect for the end of the year from the team at Base? And then we've got a bunch of other questions to get into on just more broadly.
Awesome. Yeah. So at Base, we recently just released our mission, vision, strategy for the year. And we're focused on 3 areas. The first one is making Base the best place for markets. And that means bringing every asset on chain onto Base. So crypto assets, but also tokenized equities, commodities, bonds, everything, making them liquid and making them accessible to everyone all around the world. So permissionless access to markets is the number 1 priority. And number 2 is payments. Payments both on the enterprise side, so helping companies and fintechs integrate stablecoins, but also on the agentic side, so helping to grow agentic payments, so between agents in the agentic economy. And the third one, and the most close to my heart, is growing builders and making Base the best place for builders to come and build a business. Mm-hmm. So that's really what we're focused on. In terms of like what's happening, what's in the roadmap, on the Base app side, so the Base app is the non-custodial version of Coinbase, let's call it. It's the permissionless way to access the Base economy. We're making this the best place to trade, the best place to access all of these assets as they come on chain all around the world without permission, without KYC. On the chain side, a big part of it is continually to make it faster, more performant, making the markets more liquid, and we're also adding in privacy, which is important both on the trading side and on the payment side. So we've got a lot to get done in the rest of this year, but really excited to see what happens.
Busy.
Nice. Exciting stuff. There's a bunch of stuff there that we'd love to quiz up on.
Yeah.
I have one ready. You want to go?
I want to go, but you go.
you mentioned that there are 3 areas that you guys are sort of focused on: enterprise adoption of the payment side of things, the agentic commerce elements to that as well, the payment infrastructure around agent to agent, and also, of course, like the Base community. Those first 2, like how big of an opportunity do you think people are estimating that this agentic payments infrastructure realm is? Like at the moment, it's a bit of like an emerging economy, a bit of an emerging market, but we seem to be covering it a lot, and we usually cover trending news, so that would mean it is trending news quite a lot. Would love to get your thoughts on high level. Why is this so important? Why are people so excited about this?
Yeah, sure. So I think stablecoins have just continued to grow. Every cycle, stablecoins just keep going up and up. This year, we're just seeing that momentum even more. And so when you combine stablecoins with agentic payments and commerce, you get something quite special. So I think crypto is like meeting AI, and where that's happening is around agents. And I think what we're seeing at the moment is a lot of experimentation. It's still not huge in absolute terms in terms of the amount of agents doing real payments through these protocols, but it's growing fast. And we're seeing agents do things like pay for inference or pay for tools or skills or data in order to do coding and other things like trading strategies and such like. We've also seen agents issue tokens on platforms like Banker, which is a very successful agentic platform on Base, which enables you to give a wallet to an agent and then give it instructions to trade and do things. And so I think it's going to be huge, honestly. I think we're just seeing the very beginnings of it. And I don't think we even know what it's really going to look like, actually. We have ideas, but I'm sure give it a few years, it will look completely different. One thing we're doing at Coinbase is we've recently released the Bazaar, a market for agents to go and find services and discover them. So a marketplace where you find skills or infra or data. So we're very excited to see that grow and see how developers are using those services.
That's I'd love to blow that up a little bit more. The Bazaar, love the name. This is like, I guess, some sort of market equivalent of then these sort of agents can just go and they're
like a free market
skills as well. Like, how does this? That's fascinating.
Yeah. It's very new, and the team just recently released an NPC, so you can actually access agents can access it even easier. The concept is basically we see it as a two-sided marketplace, really. You have developers building agents who want to go do stuff. So the agents have tasks to do. Sometimes those tasks require stuff that requires payment for services. And of course, you need to have services lined up that can provide those payments. So a big part of it is bringing on more service providers into this market, and also showing developers, not just crypto developers, but developers in general, that it's possible to build these agentic payment type use cases, and the infrastructure is really here. So it's really exciting, very new, but something which both Base and Coinbase are very interested in.
Yeah. Sorry, I jumped in too early.
My first question was about the first thing that you mentioned right at the beginning. The three things that you guys were working on. I wanted to ask, what does the economy look like when everyone can trade on markets with completely permissionless? Like, what does that world kind of look like? We're talking about the volume of money being able to move very liquidly, with high liquidity kind of through markets all the time, 24/7. What does that economy actually look like?
Yeah, I think people within crypto, at least from my understanding and looking at it, don't always see how big the existing economy is, especially the size of financial markets, like derivative, for example, like interest rate swaps, government bonds, all of these sorts. They're huge markets. However, the people in these markets, and I used to be one of these people trading at an investment bank, don't always quite understand how innovative the crypto infrastructure and primitives are. And we're just seeing those two things start to overlap, but it hasn't overlapped that much. And we're seeing things like AMMs, so automated market makers, now evolving into prop AMMs, which have logic and can act as efficiently as a market maker in a centralized exchange. You combine that with perpetual swaps. Perpetual swaps themselves were a completely new innovation within crypto that only happened 2016, probably around BitMEX's time. Hadn't been invented before. It was like written about in the past. A chap called Robert Schiller wrote about them in 1992, I believe, but no one could do it because the infrastructure wasn't there. You couldn't actually build these primitives. And obviously that enabled things like Hyperliquid, which is now basically the 24/7 way that oil trades and commodities trades online. So I think when you combine these primitives, which are completely new and novel, with the size of the existing financial system, you see something which looks hugely different to what we have today. But it looks much more like the crypto market than it does the previous market. So I really think it's a question of like the existing financial market coming on chain versus crypto going in and being adopted in a very permissioned way. It's going to be out in the open and permissionless, that's for sure.
Yeah, sure. Yeah, and speaking of trading, like I remember seeing it was a chat, I think, with the Robinhood CEO and a few others had a podcast around agents trading and the narrative around like, one, is this actually possible in the future? But two, if the sort of core premise of trading is like one individual might have more alpha than the other individual and they're able to use that alpha like to arbitrage. If it's just all agents and the agents are operating and they're all sort of trained on the same sort of like data, like does that sort of remove the alpha from the equation? Like, are they then just stuck in this equilibrium of like succinctness? Like does it sort of not really work with trading?
Of course. I mean, that is trading. I mean, every time there's any innovation, all the traders get better and they're all competing in the market. It becomes more efficient, for sure. And I think it's also more accessible to everyday people. So I think everyday people will have advisors, which would normally cost a lot of money. They can get the same advice you would get at Morgan Stanley as a millionaire, just on their app. And that can help them make better decisions, like simple things like around a mortgage, perhaps, or around like what assets to buy. So I think that accessibility is where I see the biggest, the biggest innovation for most people. And then, of course, in like proper trading land, it's always going to be a zero-sum game to some degree. And the better the agents get, the better the other agents get, and it just raises everybody's game, basically.
Awesome. I love it. Cool. I want to talk about the builders for a second, and about what is your favorite project to come out of, since you've been working at Base. What's the coolest base building project that you've seen?
I mean, there's so much, honestly. I mentioned Banker. I need to give a shout out to Banker, just given how important Banker's been to the agentic economy on Base. One project I really like, it actually won Base Batches last year. Base Batches is our in-house accelerator. And the project's called Upshot. And Upshot combines prediction markets with sort of like cards, like Pokemon cards. When you get, or like football cards, when you're a kid, you get this pack and you sort of rip it open and see who you have, and what you might have all of them, or you might just swap your Cantona for an Andy Cole or whatever. 90s football, sorry. And the concept is basically combining that but with a prediction market. And so you go into the app and you rip open your pack, and your pack contains prediction markets, which are random. And so you don't know what you're going to get. And so these prediction markets might be that Man U's going to beat Liverpool at football tomorrow, or maybe that oil will fall by 10% or whatever. And suddenly you have this pack of predictions, which now you care about stuff because now you're interested to see who's going to win that game or what's going to happen in the market, and you might win. It might be a very profitable prediction that you have. So I thought that was a really creative way of combining a very consumer type activity with a new financial primitive like prediction markets.
Yeah, we had like a really brief chat with the founder. Was it last week or?
It was last week.
Last week maybe. It was. We were just stunned by how like creative you can get within it, which is really cool. And I guess this is a great segue onto the consumer aspect of things. You put out a tweet recently, and like one of the core theses for the show is we love to review people's tweets and what are they saying on their opinions on the space. And this one stood out a lot, and really related to like the consumer angle that you take, and within the design of products, like adoption as well. If something is effortless to consume, someone worked very hard to make it that way. How is this applicable today? Would love to know your thoughts around what does this particularly mean. And also, was there something that you were using at the time where you were like, hell, this is super cool?
Yeah, I think it applies to everything, really. Even writing, like if you have someone like give you a very clear message or a very clear brief, that takes time to prepare. We're seeing this with AI a lot. I think because people can use AI so quickly, you get given a lot of AI slot, and actually like writing a crisp message is a lot harder than giving someone a long one. Like the quote of like, I would have written you a shorter letter, but I didn't have time, is very applicable now in the AI. So I think I was thinking a bit of that, but also, particularly in crypto, making crypto easy is actually really hard. I've been building in crypto for 10 years now. And right at the beginning, like using crypto was really difficult, just the way it was done, because the protocols were very early and just the security around it was difficult to do in a very consumer way. And companies like Coinbase have made it extremely easy to buy crypto, to use crypto. And like that took a lot of time and effort. That took 10 years to get to this point. And then to do it in a non-custodial version, like the Base app, is even harder, because you have to basically build in the ability for the user to control their own keys and all of that infrastructure while maintaining all the permissionless nature of it, which is even harder than doing it in the centralized version. So I think making crypto really easy is hard. And so my hat goes off to all the builders who are doing that every day.
You'd love to hear it. Dan, just coming up to time. Thank you so much for joining us. It's been an absolute pleasure today. And you're welcome back anytime.
Thanks so much. Great to be here. Thanks, Jack.
Cheers, Dan. Have a good one. Ciao, ciao.
Awesome stuff. Before we have our next guest on, Framer, build better sites faster. Go to framer.com/ETN. Next on the show, we have Dr. Aron D'Souza. Aron, can you hear us?
Welcome
How's it going?
to the European Technology Network.
You're in a very European backdrop right now.
I love that backdrop.
Yes, I'm in my grand Georgian townhouse. So
that looks beautiful.
We love it. Can we should do a pod from your house?
Yeah, that looks amazing. Welcome to the show. Thank you for joining us. We have, for those listening at home, we have the founder and CEO of Objection, a newly launched AI platform, and also the president of the Enhanced Games. I think you've stepped down now to go all in on Objection. So a few things to dig into there, but maybe I guess just to start us off, what is Objection?
So just by way of background, I'm a lawyer, and famously I led Peter Thiel's litigation against Gawker Media involving the wrestler Hulk Hogan, where we won the largest invasion of privacy judgment in history. That experience taught me that the law is not accessible to most people, particularly if you're trying to fight against a large media outlet. And so what Objection is a high-speed way to make the media accountable for what they write. It's the first platform designed to make media accountable, and we use a combination of human investigators plus artificial intelligence to determine what is true in the reporting, in particular from the legacy media.
How do you, I mean, straight off the bat, just thinking on the top of my head, like, how do you deal with the volumes of this? There must be a lot sort of coming your way, right? Like, how does this work in practice? Like, what is the process?
Yeah, so the way it works is that any individual can file an objection. They pay as little as $2,000 to hire a team of FBI, CIA, former agents who will investigate the story that's been written about them, line by line, sentence by sentence. The investigators put all that information into a data room that's publicly accessible. The original journalist has the opportunity to rebut that, and then AI looks at all of that data and makes a determination about what is true. And I always say truth is not a vibe, truth is a process. And courts are a very good process about finding truth. Two adversarial parties arguing an antithetical point, and it's about who's made the best argument with the most evidence.
Wow,
that's cool. Look, law and media have been around for a long, long time. Why has this not been done before? Was this not possible without AI? Why do you think that this is the kind of right time to start a company like Objection?
Well, that's a great question. So after I won the Gawker lawsuit in 2016, I thought about creating Objection. I wrote the business plan, but it involved lots and lots of humans doing manual review of articles and of and writing judgments, and it would behave like an arbitration court. And then with the advent of artificial intelligence, it's become obvious that lawyers are probably the most displaceable profession, but judges are too. AI, according to research published by the University of Chicago, applies the law consistently 100% of the time, versus human judges only do it 52% of the time.
Wow. And this problem that you're tackling, like how big is this opportunity? How big of a problem do you think it is today? Like, would love to get a scope on, what do you think the TAM here is?
According to the University of Oregon, 2/3 of all newspaper articles have a material factual error, and only 2% of those are ever corrected. And so we live in an era where, some people call it the post-truth era, and it's very difficult to ascertain what is true. And ultimately, the fundamental human challenge, probably the last job that humans will ever do, is distinguish between truth and fiction. And we need to build a much better process for that. Just because the New York Times says something is true doesn't make it true. And having opaque editorial standards and a process that was invented hundreds of years ago is not a very good truth-seeking standard in this modern, complex world that we live in.
Yeah.
And I mean, maybe this is a silly question, but do you see Objection being the gold standard for, making sure that media is as true as it can be?
Yeah, so really there is no independent authority overseeing the news media. We can't trust Rupert Murdoch. We can't trust the editorial board at the Daily Mail to tell us the truth. Their job is to sell newspapers and make money. And the Independent Press Commission in the UK has no real authority. Governments tend not to want to regulate the news media for obvious reasons.
Mm-hmm.
And so here's a private sector-based solution using data and transparency to make the media much, much more accountable.
How like for the Europeans, I guess, like which is primarily our audience, they may not be too familiar with the lawsuit in 2016. When we talk about founding journeys and inspiration, like when we were doing our research, it was quite clear, and you've already stated it in somewhat, like that this probably was maybe, whether you knew at the time or not, the birthplace of what Objection could be. Could you maybe walk us through like how, like what specifically sort of happened with that, and like how has that led on to Objection being founded?
It's a story. I was a 24-year-old first-year law student at Oxford University. I had been on campus for about 5 days. This is in 2009. I met Peter Thiel, who was then not that famous an individual. This is nearly 20 years ago. And we were just having a chat, and I said, well, you're a billionaire. You must not have any problems. And he said, well, I do have a lot of problems. And I was like, well, what's your biggest problem? And he said, well, it's this gossip website, Gawker, that keeps writing terrible things about me. And I can't do anything to stop it. And I paused there for a moment, and I said probably the most important words in my life. And I said, well, if you don't want to solve it, why don't you find someone who wants to do so but doesn't have the resources, and fund them in sort of a proxy battle? And he was like, oh, that's a really interesting idea. I hadn't thought about that. So I said, let me write you a paper about it and write you a plan. And a few weeks later, Peter and I met up. I handed him this plan, and he was like, how long and how much money would it cost to destroy Gawker? And I said, 5 to 10 years and $10 million. He's like, great, I'll wire you $10 million in the morning. And that was it. And we ended up winning in a huge way. We won a $141 million judgment. It was the first time ever, really in American history, that a major media outlet was held to account. Gawker went bankrupt after the case. And the person fighting the proxy war for us was the wrestler Hulk Hogan, where Gawker published an unauthorized sex tape of him. And, they claimed that they were journalists, that this was in the public interest, that there was a First Amendment protection, none of which stood up in a court of law. But the problem was it took Hulk Hogan 10 years and $10 million to get justice. And even for a veritable celebrity like Hulk, he didn't have the resources to fund this. And we want to make this same process of media accountability now accessible to everyone using the magic of technology and software.
Yeah. Why do you think, fascinating story, of course, why do you think, even with that as an example, that I guess would be a shining example for those who sit in the industry, why do you think people are still sort of kind of just doing what they want, right? They're just kind of coming up with stories, and if it fits, it fits, or whatever gets the most attention, I guess.
Yeah, and it deals with the incentives of the media. So 30 years ago, a job of a journalist was to sell a subscription to the New York Times or sell a whole newspaper. Today, it's about generating clicks and selling advertising, which is a very different media model. In 1970, according to Gallup, 70% of Americans trusted the news media. Today, that's only 30%. And so the collapse in trust has already existed. And I always say, like, whose job is it to make truth in this world? I'm certain it's not Rupert Murdoch's. I don't think it's Viscount Rothermere, who owns the Daily Mail. And dare I say, I don't think it's Sam Altman or Mark Zuckerberg either. Right. And so we have to build better infrastructure for finding truth, because this is really the foundation of our civilization. If we don't have shared truth, we can't reason together and build a civilization together. And that's why we feel like we have such a fractured society today, because there are such different worldviews, because there isn't a shared sense of objective reality.
Mm-hmm. Yeah.
And I don't know if you agree with me here. We think, and I feel that the world has got ever more polarizing, and more things are happening that you would never have even thought could have happened. More people are attacking each other, and the list kind of goes on. What do you think the kind of next 10 years looks like in this, I guess, saga of the polarizing world of geopolitics and tech and everything else that's going on? Because it just seems that there's so much noise and so much chaos all the time.
And so in all the successful eras of human history, there has been an arbiter of truth. From the fall of the Roman Empire until 1517, it was the Pope. If the Pope said the sun went around the earth, that was true. Yeah. And then with every new technological epoch, there has been a new arbiter of truth. The printing press meant it became the universities. The rotary printing press made it the newspapers. The rise of television meant it was like Walter Cronkite or the BBC on the 6:30 news. And with the rise of the iPhone and of social media and now of AI, it's not clear how we arbitrate truth anymore. And we can't trust our institutions as a result. Do I trust the President of the United States, Elon Musk, Mark Zuckerberg, or Sam Altman to tell us the truth? I don't think so. And so I believe that the most valuable thing we can do in our society is build infrastructure that allows us to find truth, because that is how we end polarization. That's how we build a cohesive society, and that's how we move forward in the sense of progress.
Yeah, the mechanisms for it are really cool. And I think we were seeing like early signs of it with prediction markets, right? When there's a financial incentive to get the right answer, it kind of reveals itself within the money that's flowing through that market. Like a lot of people were saying, you know, the fact that insider trading was even occurring on some like these platforms, it was basically highlighting the fact that like the truth is within the answer really, and you were getting it earlier, or there was more trust within that compared to, you know, an outlet that might be owned by someone, right? Like, is these kind of the first steps to that? Is that?
Yeah, and I think community notes are another really good example of a system of truth seeking that has dramatically improved the public discourse. And likewise, the prediction markets, these are open source algorithms. And any institution that is the arbiter of truth wields great power and should be subject to very high transparency. So all the algorithms at Objection are publicly accessible. You can read the white paper on our website, objection.ai. And I think, you know, that poses an important question. If large language models like OpenAI or Anthropic wield such power in our society, why isn't there transparency about how they actually operate? And when, you know, Mark Zuckerberg turned Facebook from a chronological feed into an algorithmic one, that was one of the most seminal shifts in our culture that ultimately started the decline of information quality. And I think that Mark Zuckerberg should be forced to disclose how that algorithm actually operates.
Sure. Look, we've only got a few minutes left. I wanted to also get an update on the enhanced games. Obviously, you were the CEO, now the president. Are you able to give us an update? What's the, you know, when is the next event? Is it in May? Is that right?
It's in May, in Memorial Day weekend in Las Vegas. You know, it's going to be a showstopper. Athletes have been training and enhancing at a training camp in Abu Dhabi, all under medical supervision. You know, world records have already been broken in training. You can see the videos on our Instagram. You know, come to the first enhanced games and see, you know, Usain Bolt's 100-meter world record broken, or the 50 freestyle in the pool. And the first opportunity to see superhumans in action. And I should also note, you know, and I'll limit my speak here because of regulatory reasons. Enhanced Games is undergoing a SPAC combination on the New York Stock Exchange at a $1.2 billion valuation, which we're very happy about.
That's awesome.
Yeah, that's a great valuation.
I will never get this opportunity again, I don't think. So I have to ask, just like, what is the founding story for this? Like, why were you looking at the Olympic Games and thinking like, why don't we see what's actually possible here? You know, like what was the decision? Because it's such a unique, you know, mission. It's, awesome. It's really cool. To say the least.
Well, thank you. Yeah. Well, you know, like all things, it begins by reading. I read a paper by Professor Julian Savulescu, who's a bioethicist at the University of Oxford, who argued for an enhanced version of the Olympic Games. And I also read another study that showed that up to 50% of athletes admit to using banned performance-enhancing drugs, yet only 2% are caught. And so why lie? And I think the work that we have done has been extremely powerful. You know, the U.S. Health Department is in the process of descheduling many peptides. They're talking about descheduling testosterone. And we should be able to enhance our bodies like we enhance our minds. And this is the way that we could eventually overcome our, you know, aging and become truly superhuman.
Yeah.
You mentioned that a few world records have been broken in training. Have any been broken in a race yet, or is that?
Yeah. So Christian Golomev of Greece broke the 50 freestyle world record in swimming. He was 31 years old. He was only enhanced for about 3 weeks, and he's a decade older than he should be. Right? He's, you know, past his prime for a swimmer. And more importantly, we also paid him $1 million for breaking that world record, which is life-changing money in the swimming profession. So he's probably the highest paid swimmer of all time.
What a cool story. Well, look, congrats on that success, and congrats on launching your new venture. Look, keep us updated. Feel free to come back whenever you want.
We'd love to have you back.
And we're excited to hear updates.
Thank you very much. Thanks for having me on the show.
Thanks, Aaron. Have a good one. Ciao, ciao.
Awesome stuff. Before you're our last guest on, leave our dated business banking behind with Airwallex. Go to airwallex.com. Now we have our last guest.
Jeff Hawke,
Here he
CTO
is.
at Odyssey. Jeff, welcome to the show. Mate, absolutely buzzing for this. We have maybe our longest list of questions and the whole day we've had so far. So you're gonna have to, sorry for that. We're gonna be peppering you. Maybe just for the audience, a quick intro, just who you are, your role, and also what is Odyssey?
Yeah, sure. I'm Jeff Hawke, CTO of a startup called Odyssey. We are a frontier lab developing a new category foundation model called world models. So this is a really relatively new category of AI model. Rather than think about sort of modeling text or modeling sequences of text, what you're doing is you're modeling how the world evolves. So given some observation of what's happened in the world, if I make some change, what happens next? So you can kind of think of this as a model that gives you an intelligent stream of pixels you can interact with.
Yeah, wow, that's the best way we've had it summed up so far on the show, I think.
I mean, look, talk to us straight off the bat about the kind of like GPT-2 moment of world models. You know, they've kind of seemed to be the next big thing. People like Jan Lee Kuhn are saying, if you're working on LLMs, language-based models, you're stupid. Can you talk to us about that?
Yeah, sure. It's certainly been an interesting 6 months.
For sure.
So, interestingly, I'd argue that world models as a concept are in some ways not new. I mean, the sort of origins you can trace back even to sort of neural network research in the 1990s. And in particular, there was a lot of work in autonomous driving, my former industry. Think of this as modeling prediction of what will happen in the world. And so I guess personally, and many of my colleagues have worked on this as a technology for a number of years. At Odyssey, we've worked on this for about 2.5 years. And 2.5 years ago, I remember when during our seed pitch, no one knew what a world model was. So I think we were a little bit ahead of the curve in that regard. And I think it's safe to say that a lot has changed in the past 6 months.
Yeah.
I think it's a product of a couple of things. Firstly, the technology has made massive leaps from where we were a year ago. A year ago, frankly, it was very difficult to get sort of stable sequences more than maybe 10 seconds-ish was a state of the art. And now multiple minutes is comfortable. By the end of the year, we'll certainly be at 10 minutes or more. So that has been a huge tailwind. I think as part of that, folks like Jan becoming louder and more involved in this as well, I think is good at raising the awareness of the category. And it was quite visible actually at the machine learning conferences like Europe's, for example. It's definitely one of the, it's become the sort of flavor of the year, maybe is one way to say it.
Yeah. That makes sense. I'm struggling to understand, like, obviously do not come from the space. And like, you're obviously bullish on world models, I guess, over LLMs might be fair to say, given the fact that like you're working at Odyssey. Would that be like a fair thing to say?
I wouldn't say it's over LLMs. I think they're just different categories. I mean. Okay,
so that's interesting. Okay.
Yeah, so I think there'll always be a place for LLMs essentially as text native AI model. And world models think of as more like multimodal AI. So it's streams of pixels with audio, and text is part of it for sure.
Right.
But I don't think it's necessarily competitive with LLMs in that regard. Maybe there's a little bit of at the margins where, to some extent. Rather, I would view it as a new category of a similar size to LLMs. Obviously, much more nascent, it's much more early, but I would view it as a parallel category rather than competitive.
Yeah. Sure. And I'd love to know about, firstly, your transition from autonomous vehicles into world models. I'm not sure, like the particular, Waymo's waves and like everything that Tesla is doing. Some of them are like using visual and spatial data and pixels to train the vehicles. Like they're doing it in different ways. Would love to know like a little bit on, how was that transition? Because I guess it's, pretty similar world-ish coming across. What was that like going from autonomous vehicles to, I guess, core focusing on world models?
Not a particularly big leap, to be honest. So, I mean, as an industry, autonomous driving was really where a lot of the forefront of AI or sort of algorithmic technology development took place for the past decade, certainly the 2010s. And most of the top technical talent would head there for basically because it was the hardest problem and you could see the most impact from your work. So in many respects, this is sort of an extension of what we've really done for the past decade. I'm very fond of and biased towards Wave. And frankly, we spent a lot of time researching world models there. And a lot of the lessons of how to think about it, how to, the challenges of building it, apply quite nicely to general purpose world models. There are some differences. At Odyssey, we care about general purpose world models. So think of this as open-ended interaction. And that is definitely different and a difficult problem compared to autonomous driving, but nevertheless, there are parallels.
Yeah.
And I wanted to talk to you about the where you believe that the kind of like mass market opportunity here, like the first mass market opportunity here for world models is. You guys specifically focus, I guess like, what one key thing is gaming. Can you talk to us about is that like a mass market like opportunity, one of the first, like, and why? Why is that?
Yeah, so I view world models, particularly general purpose world models, as a foundational technology. If people are building it just for a single category, so world models for robotics or world models for X, then I think I struggle to argue that would be a foundational technology. But if you're building it as a general purpose one, frankly, there are many applications across many industries. Our strong belief is that gaming is the likely first ChatGPT equivalent pop of demand. And I don't think we're more than 12 months from that. I think that's going to be later this year.
Interesting.
Think of this as sort of the game engines of the future. It won't look necessarily exactly like a Call of Duty or a Battlefield today, but certainly there are things that you can do with these models already that are getting pretty close to early versions of new gameplay experiences.
Yeah. Interesting. And I guess like long-term vision, like is there, I hate to use the word, but is there like an AGI moment for world models specifically? Like what is that? When I think that in my head, I'm thinking like I can just create a digital realm and live in it. Like what does that look like?
Like,
what is that? Yeah, I'm having a good time thinking about it. We get a new studio.
It's kind of wild. I mean, you're not wrong.
Okay.
I think it's. I mean, at one level, it does sound a bit crazy and a bit fantastical to think about this. But if you kind of look at where the technology is today and say, okay, imagine you have this consistent stream of pixels. You can get 2 minutes consistently. Let's extrapolate that out. Now you're getting 10 minutes, 30 minutes, an hour, multiple hours. Then imagine you bring in audio. Then imagine you're bringing in extra ways to interact with it. Maybe it's able to spit text out to you and speak back to you. That's a pretty interesting future. There are some very interesting product questions of, like, what does that enable? How should it be used? But I think I think world models are going to be pretty impactful over the next 5 years.
Yeah. And what does it look, sorry to jump in again, I have so many questions. Well, what does it look like internally? Like when you guys like what are the steps you take to make this better? Like you hit a certain, I'm assuming like a benchmark or something and you're happy with it. And then, how is it? Yeah. How do you improve on that? Like, is it just like resources, the scale of those resources? I would love to know more about that.
So philosophically, we believe in basically iterating quickly in research. You go and do some great research work. You then we believe quite strongly in trying to ship our models. We've put 3 of the 5, we've worked on 5 internally to date, and 3 of which we put publicly in some kind of research preview. You get feedback, you come back, you iterate, you repeat. That ultimately, I think, is what is going to drive progress in the industry, certainly over the next year. It's in terms of where we are in sort of, I guess, the technology cycle, it's definitely an era of R&D innovation that is driving progress, meaning that there's a lot of low-hanging fruit in terms of algorithmic improvements, in terms of how we're sort of approaching the problem, in terms of what types of data we're bringing in. It's not purely an era of scale alone, although there's obviously something we care about. It's a pretty rapid research cycle that we're going through, which is good. It's also what gets me out of bed and what I like doing.
Yeah. What is like we're talking about kind of like gaming, robotics, all of that kind of stuff. What does the future as a you know, like a scientific tool look for world models? I imagine like, you know, the like physics can be kind of completely reimagined with world models. How does that kind of scientific future look like for you guys in Odyssey?
So you can imagine these models as being trained on trillions of observations of the world through, usually through visual observation. So essentially think of this as visual observation with, you have to augment the data to sort of describe the actions or effectively the change that's happening through the sequence. And at large scale, that actually becomes a pretty good physics simulator. It's still an approximation of physics, but the same is true for any computational simulation, be it a games engine, be it CFD, computational fluid dynamics. They're all computational models of physics. And ultimately, this will become the next physics simulator. It's just a matter of time. And we're, again, already seeing very good performance on benchmarks. We'll be sharing some more about that publicly very soon. So it's a pretty interesting future. Personally, I think the biggest advances in terms of the benefit of that physics modeling, I think will probably come in robotics first. It's, again, one of the major industries we think about. The way to think about the use in that industry is, by the way, do either of you drive? I don't like to assume.
I drive.
I don't drive.
Okay, one of the two. So most people learn to drive with, say, like 30 hours or so of driving instruction, about that kind of order of magnitude. And you learn when you're about maybe 16 to 18 years of age, sometimes older. But sort of that's kind of the starting point. And in many respects, the reason we're able to do that is because we've had that 16 to 18 years of learning how the world works.
Yeah.
And at the moment in robotics, basically what we're trying to do is teach like a 4-year-old how to drive. So we need a lot of driving instruction.
Yeah.
Whereas if you come in with a better understanding of how the world works, that's what lets you basically get this sort of mass generalization of enabling you to drive in different countries, different environments, different sort of road conditions, etc. So I think world models are that 16 to 18 years of experience coming into ultimately something like a robotics problem. And I think it's going to be very impactful in that industry.
Yeah.
Sorry, you want to go?
Can I go? Yeah. I also read that, you know, you mentioned kind of like models trained on like trillions of observations. You know, we've mentioned physics. I also read that it could kind of internalize, fix, or have some form of impact on human behavior. How? I'm confused about that. What does that mean?
Do you mean modeling that, or do you mean sort of using it from an application perspective?
I think an application perspective.
So probably the best example I can give of that was, imagine this is some examples of various potential customers we've talked to. Imagine you're sort of like in a retail environment and you essentially have a staff training problem. But now imagine sort of a training video for your staff. You actually have a simulation of how to deal with an angry customer. So the interesting thing about this is there's a huge amount of observations of human behavior, body language, voice, dialogue, huge scale of that on the internet, and more is uploaded and produced every day. And as a consequence, actually, you get these world models are quite good at starting to model that human behavior. So imagine now that from an application perspective around behavior, imagine that sort of I'm an angry simulation and you have to calm me down. And that's quite an interesting thing as an application to, for example, in retail. So to be honest, I don't think the full scope of applications is clear yet, in the same way that I don't think that was true for language models around the GPT-2 point in time.
Yeah, for sure.
So we have some ideas and certainly some early observations, but I think it'll be a similar kind of Cambrian explosion of different use cases that, frankly, I don't think we at Odyssey have fully thought of.
No, yeah, definitely. Yeah. And I imagine you're getting ideas from prospects and customers saying like, hey, like this would be pretty interesting. And then you go, oh, we didn't even think about that. Like we didn't realize that was a thing.
Yeah, and I think that will only increase over the coming year.
Yeah, for sure.
I mean,
for sure.
We're very much sort of in a R&D mode at the moment primarily, but we're working with a bunch of design partners, various people who are interested in testing the models, and frankly, we're curious to see how what people try with it.
Definitely,
it's certainly it's been interesting.
Yeah,
and maybe like last question of the interview, just as we hit time, like what is the main thing that people are massively underestimating about world models?
I think the market impact. I don't think people have fully clocked that this is like I think there's a new category of Anthropic and OpenAI which will be formed, and I think they will exist in parallel. I think they're sufficiently distinct to mean that there will be companies that pick a lane, and there's some crossover, but in my mind, it's not enough to really do that. And I think it'll be very interesting seeing what the next couple of years looks like, and I think it's going to be a pretty competitive race.
Yeah,
So cool.
Imagine
Well,
that. Well,
exciting
look,
times.
Yeah, we're sitting here keen to hear updates. So yeah, thank you very much for coming on. Thanks for the time and such an interesting conversation.
You guys, welcome back anytime.
Thank you. Appreciate it.
Good
Cheers,
stuff.
Jeff. Have a good one, man.
See you soon. Great to meet you. Amazing stuff. Before we end the show, the infrastructure for the unchained world, go to base.org. That is the show. We will see you next Tuesday for show number whatever it is.